Morning all, how are you all doing? How is everybody? It's fine Friday, Monday morning. Friday, Monday morning, where did I get Friday from? Been a long weekend. Morning Edward, morning Peter, Evil, Yotko, Mark, Monkey, Kennelly, Danny, Johannes, Rodrigo, JC, Evans, Beggy, Gav, Feedgenia, how are we doing? New week. Exciting. Not very exciting news week though this week. Very boring, actually. Not a lot going on at all. We got a couple of bits and pieces. Obviously, CPI is going to be big, but apart from that, rubbish. Just wanted to quickly cover the Swiss franc this morning before we start. Swiss franc is on a mission. So all the Swiss pairs really powering up this morning. You can specifically see it on Euro Swiss collapsing fast, Pound Swiss collapsing very fast, US dollar Swiss coming down. So we've got a run going on the Swissy at the minute. Whether or not it holds, we'll have to wait and see. But we are due a little bit of strength on the Swissy. It's been weak for a while now. So big moves on those. So hold them if you can. There's a good chance we might get an ADR hit today on the Swiss franc. So big moves, potentially. There's no ADRs today, as you can see, so far. Where's my pen gone? Let me just... for a minute. Come on, pen. I'm running some back tests, so my machine's a little bit sluggish this morning. Go away. So yeah, so no ADRs so far today. Obviously it's Monday, it's early, so we'll see. But yeah, watch the Swiss franc pairs. The Swissy's got no bias, long or short, at the moment. If you have a look at the Euro pairs, we are kind of up and down on the Euro pairs, and the Swiss franc moves with the Euro. But the news on Friday that the ECB are definitely not changing the rates on the Euro until next June, or sorry, this June, means that there's potential for the Euro to, well, not weaken, but not necessarily strengthen, but not weaken much in the coming months. And that will obviously help the Swiss franc with its current weakness. So there's a good chance I think we might get a sustained run on the Swissy because it is very overdue. So we'll see what happens, but decent moves moving across the board there. So yeah, no ADRs today at all. Obviously it's Monday, so there's nothing on the weeklies. The monthlies, we haven't got anything hit yet either. So fairly quiet month so far. We're on the 11th. So far, nothing has been extended beyond its monthly ranges. So all quiet at the minute, but we'll see if that continues. So there's nothing to look at on the ADR side of things. RSIs as a couple. So what I'm going to do is just run through all the pairs this morning, and we'll have a look at everything, see where everything is. But we'll cover the news first of all. Did you say last week that new EA is available for demo? No. No, I didn't. You can download demos when it is available, but no. Morning, it's time. So news this week, very, very quiet. So we've had daylight savings time shift on US and Canada. So if you are trading stock indices with the SIH EA or the ORB EA, you need to... why is there no trades today? What on earth's going on there? Weird. So yeah, if you're trading the indices, obviously bear in mind that your charts, your broker time may have changed, and it will have probably changed. So you may need to adjust your settings in SIH and ORB. So obviously everything will change by 1 hour. So just look at where you are before the open and just change those times basically accordingly. So you'll have to wait and see what your broker chart time says, because everybody's different. Morning, Gregors. I'm hearing things. Yep, you are. Yeah, there's no demo. Everything I do is through the MQL5 marketplace, so you can download a demo of anything when it's available, but it's only available when it's available. It's not available. I'm still back testing. So this week's news, Monday, today, absolutely nothing, totally flat, no news, nothing expected to move, particularly on any fundamentals. So there's nothing happening today scheduled. So you haven't got to worry about anything apart from normal market movement, which obviously we seem to be getting quite a bit of this morning, which is good. So no fundamentals to look at today. Tomorrow morning, we've got the claimant count for the pound. Claimant count change doesn't tend to do an awful lot. It's based on unemployment. So it's not something that generally tends to move, like we don't get huge ADR moves off the back of it, but it can insert some volatility and, get a decent day moving. So be aware of that tomorrow morning. We've got average earnings index as well, which comes out, which doesn't tend to do a lot. But tomorrow, the main news of the week is the CPI figure for the US. So this is the core inflation figure for the US. Forecast for the month on month is for inflation to drop. So we will see, actually, that's not specifically true. Core inflation to drop, which is the most important part. Overall inflation potentially could rise, which is based on all sorts of other stuff. But the main things like the energy and things like that, we're expecting that figure to come down. Year on year, they're not expecting a change. So that year on year figure, if that comes out lower or higher, we might get a big move on the US tomorrow. So it's going to be... I don't think it's going to necessarily have a long-term impact, tomorrow's news, but if we get a big hit or a big miss, the market will put a very big move in on this because, as we know, the Fed have changed their mind 3 or 4 times now on when they're going to drop interest rates, and this is the core driver for interest rates. So if we do find that these numbers come out lower than expected, they could turn around and say, yeah, actually, that June drop, now we might bring it forward to May. And if that happens, kiss the US dollar goodbye. So if these figures come out as negatives, there's a good chance we'll get a big drop on the US. If they come out as positives, it doesn't mean they're going to put interest rates up. It means they're not going to put them down until June. So any positive news here, any positive numbers, will probably mean, yes, we'll get a bit of a move up on the US dollar, but overall that's neutral. Any negative numbers will be very negative. So that's going to be a big one tomorrow. We're getting so close to that point where we're going to drop interest rates. It's these CPI figures are becoming more and more and more important the closer we get to those dates. So June is when we're expecting that to come down. We have a quick look at the interest rates for the Fed. If I can find the right tab. We are currently sitting at 5.5, as we know, very, very high. 3.1 is our current inflation number. It has been dropping nicely quarter on quarter. So we're expecting that monthly figure to come down ever so slightly. So this to continue being a negative number and driving this down. If we get close, the closer we get to that 2%, the more pressure there is on the reduction of the interest rates. So we want the number to come out negative, really. So those are your news for Tuesday, for tomorrow. We've got the bond auctions at 5 o'clock tomorrow as well. Bond auctions can make a big impact. So it's a very weird one, the bond auction. Sometimes you get a big spike off of it. Sometimes you don't get anything. So just be aware of that for volatility at 5 o'clock, especially if you're in the indices, because they affect the indices as well. Wednesday, we've got GDP for the pound on Wednesday morning. And then we've got the 30-year bond auctions at 5. So not a lot of news on Wednesday. So Wednesday's pretty much like today. Not going to get an awful lot. GDP figures aren't really moving the markets an awful lot at the moment because GDP is a byproduct of what's happening with inflation and interest rates. So it's less important. It's less of a leading indicator at the moment. That will change when interest rates start to drop. But at the moment, not really expecting a massive move off of it. But the market might move the market at that news. So they'll use the news for liquidity. So 12:30 then on Thursday, we've got the PPI figures, we've got retail sales and unemployment claims for the US all coming out at the same time. So Thursday afternoon, another big one. So CPI is obviously retail inflation figures, basically just normal inflation. The PPI is the producer price index. So this is kind of inflation for wholesale, if you like. So this is, again, a very important figure because this impacts that that impacts interest rates. So we're going to be paying very close attention to what the PPI numbers say as well. Retail sales, obviously, very important for GDP, and unemployment claims important because if they keep going up, we need to drop interest rates. So very big day again on Thursday. So this week we are focused around Tuesday US dollar, Thursday US dollar. The rest of the week, pretty much nothing. Friday we've got Empire State, which doesn't do a lot, and UOM. So UOM, again, one of those news events which for some unknown reason massively affects the market. These 500 people that they survey at the University of Michigan, they pay a hell of a lot of attention to them. So we will see what happens there, but yeah, we'll see. But you can get a lot of volatility off of that. Quite often you'll find UOM, if there's been big news in the week and we've got a big move, UOM quite often will undo a lot of that move. They use it just to drive the market in another direction. So we'll see what happens. But that's 2 o'clock on Friday. So live room schedule this week, obviously we are on now. I'll be doing 12:15 tomorrow afternoon. So we'll be on just ahead of the CPI figures. Wednesday, we'll do a morning session to have a look at what's happened with the pound GDP, because that's the only news we've got on Wednesday. Thursday, obviously, I'll be on for PPI retail and unemployment. And then Friday, we'll be on for University of Michigan. So there's only one stream a day this week, which is going to help me catch up on all my back testing for the Position Trader EA, which I've been doing all weekend. All weekend. I've got a test running now as well. Look, I have been testing. I've had 4 MT4 terminals open all weekend running tests, literally all weekend. So I've got an absolute bucket load of data. That's my spreadsheet gone. That's over there. So yeah, I've been testing like a lunatic all weekend, basically. So I've got absolutely tons and tons and tons of system parameter permutation tests to do with not those ones because they haven't done yet. Those are running. To do with RSI. Yeah, I've got loads and loads and loads and loads and loads of it. So I've done, I'd say probably about 36 hours worth of solid testing across multiple system parameter permutation tests. The good news is, probably can't see in that corner, but that tells me that number up there is very, very important because it tells me how robust a strategy is. So the strategies that I'm running 1,024 tests on system parameter permutations every single test. And this one, for example, has got 962 of those 1,000 were profitable. This one's got all of them profitable. This one, all of them profitable. This one of them wasn't profitable. This one, all of them profitable. That one, 970 out of the 1,024 were profitable. So there's about 50 odd permutations which didn't work. So this is initial stage 1 testing, but looking, I mean, compared to everything else I've ever built and tested ever, off the scale as a robustness. So, but this is only one instrument. So I've got one instrument out of 11 tested. And I've got 1 out of 3 tests per instrument done over 1 year. And then I've got to do a 4-year test, an 8-year test, and a 12-year test. So probably going to be around about 3 to 6 months before the testing's finished. But what I'm doing now is just getting some set files together so I can pump out the EA, basically. But the tests won't be finished because it's going to be a long process testing. So, but all initial tests are looking phenomenal. So this has run 405 tests so far. 405 tests are profitable. So 100% pretty much across the board, which is great, which is what we want. So I'll be doing loads more of that this week. I've got basically my machine running non-stop with 4 MT4s running 4 years worth of testing per hour, basically. So hopefully have a good back of it broken this week. So that's the news this week. It's important for the US dollar. Everything else is kind of by the wayside. So the US dollar is going to be the main driver all week. Everything else will be pushed around by the US dollar. So we need to focus really on what the US is up to. So let's quickly look at the RSIs. Actually, it's going to be pretty quick and easy today. Hourly RSIs, there aren't any. So there's nothing extended on the hourlies at the moment. I suspect we'll get Swiss franc extensions today, possibly euro and pound extensions today as well, because those seem to be having a fairly decent move, although not quite so much. Pound is a little bit more movie than everything else. The pound's very weak this morning, or started off very weak. It might change. But yeah, so not a lot of movement anywhere apart from the Swiss franc at the moment, and that is obviously powering up very nicely, but doesn't mean it's going to continue. So we need to see if that move continues on the Swissy today. 4 hours, obviously we've got a lot of yen extensions still. So we know the yen has finally powered up. We've been waiting for that yen strength to come in, and it has. So anything that is extended on the yen on RSI or on ADRs, I'm not taking any longs at the moment. I'm literally just shorting everything against the yen, because I think the yen is going to continue to power up. We are talking about interest rate rises, and potentially as soon as next month. So that yen is going to really strongly power up over the next couple of months. So I don't really want to be getting into any long positions, because I think there's a good chance you're just going to get into a squeeze for a while on it. So I'd rather just short it. We've got the advantage with the yen at the moment. It's one of the very rare instruments. You have a fundamental advantage where if it pushes, if everything pushes against the yen, the Japanese will intervene. So doesn't really matter if you go short on it, short on everything against the yen, and it pushes against you. You've got the Japanese on your side, and they will pump the crap out of it if it goes wrong. So it's one of those rare instruments where you can sort of say, when you're up around this 150 level on US dollar yen, do nothing but sell it. If you buy it, it may work out. This may well pull back up into here, but it's going nowhere but there over the next 2 to 3 months. So there's still opportunities for mean reversion, but as we know, the market has a tendency at the moment to do lots of pushing and accumulating and pushing and accumulating, that sort of movement. So we're not getting normal market structure on a lot of instruments. So just because of the nature of the market being scared and not knowing what to do at the moment, because they don't know which way interest rates are going to go and when. So until there's some clarity, we're just push, stop, which is what we're doing. You can see it very clearly on this chart. No idea what to do. Push, no idea what to do. Push, no idea what to do. Yeah, this is what we're getting. Normal market structure would be pullback, push, push. Just not getting it on a lot of instruments. So that's why I would rather not do that, because there's a good chance it's just going to do that and drop, and all you're going to do is scale into a squeeze, which isn't going to be pleasant. But it may well do. I don't know. If I knew what it was going to do, I'd do it. But yeah, so yens are moving very nicely as well. And you can see, obviously, we've got some continuation strength looking like it's wanting to go again today on these yens. Yeah, they are starting to look a little bit more powerful. So all we've got really on the 4-hour extensions, CAD yen, Swiss yen, New Zealand yen, and US yen. So we know all the yens are very extended. 4-hour charts, massive extensions on them to the downside. So we are still all the way down here, but there's a good chance we might just hover around that lower half on the RSI as we get continued relative strength on the yen against everything. So probably not the best longs in the world. The other 4 hours you've got are the pound US dollar, which was nicely extended off this run last week. So last week was literally solid, straight up pound against the US. Lovely pullback underway now. So I've got shorts on this on the H1M5. So looking for a pullback, 38 or 50% retracement on that. So I'm short at the moment, back down into this sort of area. If it's going to pull back on a 61.8 retracement, you're coming back down to retest the highs there. So that would be a deep pullback if we're going to continue long. And there is a good chance the US this week could get bad CPI numbers, could get bad retail, could get bad everything. And if that happens, obviously, this is going to continue to push. So we'll have to wait and see what happens. But obviously this week, this is going to be driven by the US dollar. So there's a good chance we might get a flag break and continue. We'll have to wait and see what happens with the news. But so that is extended to the upside. It's starting to pull back now. So ideally for us, or for me anyway, I'd like to see an ADR hit on this today. If we can get an ADR hit to the downside, I'll be out of all of those. And then whatever happens with the news tomorrow with CPI figures, I don't care because I'll be out. But we'll see what happens, see if we can get a continuation drop on this. Pound's quite weak this morning, so I say that. Weakish. You've got the pound Swiss and the pound CAD also extended on the 4 hour, but they only just, these are starting to roll over now. So that was an extension above the 75 level. So we're looking for that same movement as we had there, here. Yeah, we're just looking for the pullbacks, profit take moves on the pound CAD and the pound Swiss, which is already pretty much done. And you've got euro pound. That's the other 4 hour. So that one's obviously already starting to play out as well. So there's your 4 hour extension. Looking for that pullback, which I've got the longs on at the moment, but my average is all the way up there, miles away. I've been in this thing since January. Stuck. Again, stuck in this because of exactly what I was talking about earlier. Yeah. Just going sideways. But I'm in long. If we can get back up into those highs, I shall probably just cap a lot off and walk away. So yeah, I mean, at the moment, my target is this propulsion gap, which is your closest target to the upside if we do get a range break. But if we do get back up to here, I will probably just exit this. It's costing me so much money in swaps to hold it. I just can't be bothered with it anymore. So I'm just going to get out and be done with it. I was having a look at swaps actually over the weekend. It's very interesting how the swaps are affecting position trading at the moment, because it's a lot more expensive to position trade at the moment. Anybody that's holding long-term positions, you are obviously affected by swap a lot more than anybody that is intraday trading, scalping, that sort of stuff. And some of these swaps, you can see, you know, CAD yen, very, very high, $2.40 hold prices, you know, but if you go the other way, which we don't want to, you get positive swaps. So, you know, there is an argument for, at the moment, with position trading, just running the market reversal alert CA and position trading in line with swap, because swaps are making it very difficult to get out of some positions, like that euro pound. I am in, and the US dollar yen. Yeah, was it $1,600 in swaps paid on that trade? I still made money on it, but I could have been out of it weeks before, a lot further behind in the trade, because the swaps were stopping me getting out because I had too much money in swaps. I couldn't get back down to my average. So it's good. Forex give you that chart, that table there of exactly what you're going to pay positive and negative in swaps. So you can identify all the positives. And obviously yen at the moment is going to be the big one because they've got negative interest rates. So, but there's lots of other things like the euro pound, for example. Where's that? Down here. Yeah. So I'm long on it. So I'm paying 0.73 on a negative swap. If I'd have been going the other way, I wouldn't be paying a swap. And some of these, you know, Aussie dollar, US dollar, you don't pay swaps if you short it. Yeah. So obviously the downside to this is you're going to miss an awful lot of opportunities to get into trades. But, you know, swaps are a cost of doing business. There's absolutely nothing you can do about them. But it's just one of those things you need to be aware of in trading. Over weekend news, I forgot to cover. There wasn't any really. There's nothing read over the weekend, apart from Houthis blowing up more ships. But apart from that, yeah, nothing over the weekend to report. So no weekend news. Right. So those are your RSIs. So there's nothing much to look at anywhere at the moment. As you can see, it's all pretty flat. Let's see what that Swiss is up to. Euro Swiss is pushing back up. Pound Swiss still coming down. All good. Right. So let's have a look at, first of all, let's hit the thumb. Morning, Steve. Morning, Chucks. Morning, Neo. Danny, Ryan. Smash the like button, hit the thumb. All that stuff. Pound US dollar, Aussie US dollar. I think I've covered the pound US dollar. but we'll go through every pair anyway. So I'm going to whiz through all the pairs today, and we'll have a look at where everything is. So this week, basically, you just need to bear in mind there is only US dollar news, really. So if you look at the news calendar, yes, there is news on the pound. We've got £2 news, but if you look at the calendar, there's a pound there, there's a pound there. There is absolutely nothing else on this calendar apart from US dollar this week. Yeah, so it's all about the US this week. There's nothing else. So every pair we have out there at the moment, obviously the majors are all US dollar crosses, the minors are all others. So everything is basically going to just move on normal bank movement. The only things that we're going to get moving really aggressively are potentially US dollar pairs. So everything you look at the moment, we know that without news at the moment, we literally range. So with normal trading conditions and normal market conditions, you have a bias where you have one country that is more bullish than another country. So you have a bias to go long or short. Yeah. So it's either a buy because the euro is incredibly strong at the moment because of high interest rates. The Australians are removing their interest rates, which makes them very weak. Therefore, you should always be looking for long opportunities. At the moment, because everybody's interest rates are at the same level, high, and everybody's interest rates are doing the same thing, nothing, everybody has a neutral bias. So every currency is neutral, which means that there is no bias to go massively long or massively short on anything apart from, at the moment, the yen, which you want to be longing, i.e. selling everything against the yen. So without news catalysts this week, you should expect a rotational based week, basically. So a little bit of a push up and then a little bit of an undoing, a little bit of a push down, a little bit of an undoing. Yeah. So where we are at the moment with all these sorts of things, if you want to get into stuff and you haven't got any RSI extensions, you haven't got any ADR extensions you want to get into, you're just looking for support resistance levels. So as with the support resistance propulsion indicator, look for monthlies, look for weeklies. Yeah, the black lines are the weekly levels, purple lines are the monthly levels. Propulsion gaps, yeah, look for areas we've sold from before. When we get back to them, good chance we might sell from them again. So that's really all you can do on weeks like this, apart from anything against the US. So all the majors, obviously, you're looking for whatever the US is going to do, it's going to do. There's nothing you can do about it. But everything else that is a minor cross, like Aussie, New Zealand, it's just going to sit there and flip-flop around, waiting for some Aussie or New Zealand news to drive the market. So that's really all you can do. The Canadian dollar is obviously going to move off the US as well. So anything you've got CAD, you'll probably find that you'll get big spiky movements on the CAD, whereas the US moves, so they all move together. So that's just basically all you've got to be aware of this week. So start with the Aussies. Aussie dollar CAD. We just had a reversal alert going. We've had a 3-day push on the Aussie CAD from Wednesday last week. Just had a reverse alert going. So we're looking for a push back down into propulsion. You can see I've got a short on here from last Thursday, targeting propulsion gap there, which is 125 ADR to the downside, which is obviously somewhere around these highs as well. So if we are going to continue on our merry way with bullish market structure, we're looking for some higher low to buy out of. So I'm selling down into where that higher low should potentially be. Other than that, not a lot else you can do with this one. As I say, it's very much news, no idea. News, no idea. Yeah. So we've had negative moves on the US. Obviously, Aussie dollar's pushed against it because, CAD. So Aussie dollar's pushed against it. So we're looking for that move to unwind before they start their next leg, whichever way that's going to be. So at the moment, we're pushing up into a nice area of balance, which we sat and traded in for nearly 2 weeks before we pushed the next move down. So this area here, we sold out of, and it looks like the sellers are adding back into these positions long term that they're holding there. So market structure overall is currently potentially bearish on this, but short term, it's bullish. Potentially. Yeah. Don't know. This is the beauty of market structure. We don't know where it's going. We don't know which way market structure is going in the future, but we do know if market structure is going to do what market structure does, where it's going to be going before it does whatever it's going to do. We just need to know that there's a chance of it doing market structure. What it does after that, don't care because we'll be out. So at the moment, that one's going absolutely nowhere. Well, it's reversing, but obviously today so far it's gone nowhere. Aussie dollar Swiss, again, market structure at the moment, very, very sideways on this. We've just pushed up into this whacking great propulsion gap. This area of balance, again, we sat in for weeks. We've come out of this propulsion move, which started that leg off down there. So maybe that the sellers are taking over. I'm short on this one at the moment off of the H1M5 entry here. So there was an entry there on the hourly RSI extension, which I got into. Then we pushed up the next day, slightly pushed up. Second entry taken on Friday. This one's nicely in profit at the moment. Looking for a push down. I haven't actually got targets on this. Where should we go? Seeing as the Swiss franc is so strong today, I'm just going to go with an ADR target on this down here, I think. So yeah, Swiss franc powering up very, very nicely at the moment. So again, watch this area here. Potentially we could get a bounce out of here, which is what we got there. So we might find we get a double bottom bounce out of this low here, but I'd be looking more for reactions somewhere around this area here, which is where my target is. So ADR today to the downside, potentially for a bounce up. So if market structure is going to continue, you've got your low, high, higher low, higher high. We're looking for a higher low somewhere around that area. So if you want to stick a fib on it, look for your shallow pullback, 38 retracement is exactly where we are now. 50%, 61.8, 71.9. So this would be a very deep retracement. So that's your potential sort of deepest point you would expect to get to if you're going to continue with bullish market structure, which falls in line quite nicely with that level there. So that's moving very nicely. We're just coming out of an RSI extension to the upside. So obviously I'm short on that in a minute. All the yens, there's not much point in me talking about the yens. It's the same thing with all these yens, basically. Bank of Japan came out last week and confirmed that, yes, there is a very, 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 very high probability interest rates are going to go from negative 0.1 for the first time in 7 years up to 0, which means that it's bullish. So they have said potentially it could be March. Obviously, that's just a figure they've pulled out of the air, but more likely it's going to be April, I think. So in the next sort of 4 to 6 weeks, we should see them talking much more about that, which will make the yen more and more bullish. So I would only be interested really in selling everything against the yen. So I've turned the market reverse alerts EA to short only mode. So to short only mode, so that if we get any pushes, i.e. RSI extensions to the upside, I'm interested. If we get any ADR hits to the upside, I'm interested, but I'm not interested in buying anything against the yen, because I want to be buying the yen, which means I need to short everything against the yen. So this is obviously pushing down at the moment, which is what we would expect it to do. So you have got mean reversion opportunities on all these yens. You're obviously going to get mean reversion opportunities because it's pushing down. And there is a good chance that we might find we do get, a fairly decent market structure move, and it comes down very orderly. But any moves that you do take long against the yen, stick a fib on it. When you get to 38 retracements, just protect the position. Yeah, because if it's going to be a strong trend that we're going to start on the yen, these pullbacks aren't going to be particularly deep. So you want to be looking for shallow pullbacks, 38 retracements, yeah, maybe 50s, possibly 23s, which is a very, very, that's more of a flag break. Yeah, 23 retracement is more of a flag break move. Yeah, which is obviously in a very, very strong trend. So just be careful longing anything really on the yens. It may be that the Japanese don't say anything for 4 weeks and the market gets bored and it just suddenly starts to roll back up again, in which case then they will suddenly start to say something. But I just would be cautious about trying to long it at the moment. Huge collapse, CAD yen. We come down into the monthly levels on this. So we're down at the previous month's low. We got a lovely bounce off of it. But whether or not we can get a bounce back up. Look for propulsion gaps, yeah, for where they're going to add more positions in. And obviously where we're going. So the thing with these yens at the moment is because we've had such a massive, strong move against the yen for such a long, sustained period of time, you are going to find support resistance zones all over the place where the market could bounce. It's virtually impossible. It's always impossible to tell where the market's going to bounce. That's why we can't do it. But you know, this is a beautiful double bottom here, for example. Lovely double bottom off of a previous resistance. Resistance turns into support, and that's what we've hit now. So everyone's buying the crap out of it. Yeah. All it's doing is providing liquidity for the market to go short and carry on its move. So it could go absolutely anywhere. But if it pushes up into here, yes, I'll be having it. Sure, definitely. So all these yens, basically, I'll cover them all. They're all very much the same. We're looking for a complete unwind on this yen move for it to start to power up and, you know, drive now. So I've got shorts on here. You can see that I've got 2 shorts on the euro yen at the moment. My target's all the way down here at the monthly levels. That's 225 ADR away from where we are at the moment. If this pushes all the way up into there, no problem. I'm just going to add another one and get out of it when we get down there. But just holding as much on these as I can for as long as I can, within reason, because it costs money to hold them. But pound yen, you can see I've got out the pound yen and the US dollar yen. There's the New Zealand yen, same thing. But the pound yen, the US dollar yen are very good examples of squeezes. I posted it in Telegram. Yeah, this is a trade that I got into on the 2nd of January. Yeah, pound yen short, US dollar yen short, got into on the 2nd of January. It's taken 3 months to unwind it, and it's been a pain in the ass the whole way. But this is the beauty of position trading. Yeah, I got in. I've been wrong for 3 months, and I came out of it with 1.5% profit. Yeah, it's not about making a fortune. It's about not losing your money. That's what position trading is all about. Not losing, not winning fortunes, buying Lamborghinis. It's about making money, which is what we do, isn't it? So, so yeah, continuation on this. Now, this has been a very big, strong drop. So with the US dollar yen, obviously there's a good chance it will get a bounce, but that is only going to happen if we get positive numbers on CPI this week and PMIs, everything. PPIs, sorry, isn't it, this week? Not PMIs. Payment producer price. So it will happen if we get positive numbers. If we don't get positive numbers, this thing's not going to do anything but drop further. So the US dollar yen, the one which obviously moves the biggest and the fastest out of all these yens, because when you pull money out of the US dollar, if you've got nowhere else to put it, you put it in the Swiss franc and you put it in the yen. So the US dollar yen moves the fastest out of all the yen crosses, because when you buy the yen, you're often buying it with the world's leading currency, which does over 50% of all transactions, the US dollar. So this will obviously always move faster when the yen is powering up, because you're buying the yen with the US dollar, meaning it squeezes twice as fast and twice as hard. If you look at that move there, which is 4 ADR, yeah, last week. If you look at the other pairs on the yen last week, that was 2 ADR. Pound yen, pound was quite weak actually, so but that was only 2.5 ADR. Yeah, euro yen, round about 2.5 ADR. So the US dollar yen, 4 ADR, always going to be the bigger mover out of them, which is why we know that when we get to these sorts of levels, the market will just stop, because transactions in Japan are done a lot of the time in the US dollar, so they need to protect that exchange rate. So those are all your yens. Obviously, I'm just not interested in buying anything at the moment against the yen, so sells only. Aussie dollar, New Zealand dollar, finishing off the Aussies. Aussie dollar, New Zealand dollar, I've got shorts on at the moment off the back of the New Zealand dollar interest rate. I still don't know why this New Zealand dollar is quite so weak off the back of a rate announcement we were expecting and we got, but it hasn't managed to recover much. So 3 shorts on that at the moment. We've just come off the monthly high very nicely on Friday. So hopefully that reversal alert that we've just got on the monthly, on the hourly there will hold. But, you know, there is a chance that we're just going to go into rotation this week and go nowhere. And if that happens, that happens. But I'm very close to average on this. So my target at the moment on this Aussie New Zealand is the propulsion move being filled. So that resistance there, I'm looking for this area here to be retested, which I probably won't hold it all the way down there. I'll see what the portfolio is like when I get there. But at the moment, that's what I'm looking for. But equally, if we come back down and retest this propulsion gap, 125 ADR, or the top of the propulsion gap, basically, that's profit. So I'm going to leave targets down there at the minute. And if we get a big, strong move off of any of the US news and we come back down and retest this level and there's any kind of sign down here of a bounce, I'll just shut it and get out manually. So so that's the Aussie. Got shorts on that at the moment, coming off of the monthly high. If this monthly high doesn't hold, if we go into rotation this week, there's a chance it won't. But if it comes back down and comes to retests, that's great. Bearish market structure on this at the moment. Look, this is potentially the new lower high for a move down. We're coming up to test this area, basically. So there's a good sort of 3 ADR more up if we don't get the pullback. So just have to wait and see what happens with that one. Aussie US, obviously, we'll wait for the news. Reversal alert happened on Friday. And that's coming down nicely at the moment. Again, targeting propulsion. So these highs here is where we bounced. So I'm looking for a double bottom off of that. Just testing that propulsion gap. Obviously, we've got propulsion gap there. Not a very good one because there's no accumulation before it. Yeah, it's just part of a strong move up. So it's not a great propulsion gap. That one there is that propulsion gap there is the break of that high. So it was the first attempt to get through it as well. So it's not a great propulsion gap either. Of all the propulsion gaps on this chart, this is the one that I would be most interested in because we pushed up into there, pushed up into there, pushed up, and then we pushed up again and slammed through that whole zone. So this order that went in there was the big buy that started that 3-day rally. So that is where I would expect if they want to go long, they would add more positions. So that's Aussie US. So there's all your Aussie pairs. Covered. Just quickly see what's going on with this Swiss. Euro Swiss is pulling back. Pound Swiss is stalling out a little bit. So the Swissy move's stalling a little. So CAD Swiss, as you can see, sideways totally last week. Didn't go anywhere. Had the big push. Again, nothing. So we're waiting for US dollar news, which is going to drive this one. The Swiss franc has been very, very weak. So we are starting to power up a little bit on the Swissy now, which is good. But not really going anywhere. There's no RSI extensions on it. The last couple of trades I've had, I had a short there, I had a long there, I had a long there off of that one. But not a lot else really on this. Very orderly. All the trades I've had on this have been 2 entries or 1 entry, straight in, straight out, straight in, straight out, because it's just going up and down, up and down, up and down. So very nice pair to trade at the moment if you can get a signal on it. So this low here at the moment obviously would be a good potential buy. Failing that, we're looking to come back down at 150 ADR and get a bounce off that weekly low. If it pushes up, we've got these highs here and obviously that high there. Then that high there, then that high there. Yeah, so it's just, there's so many levels you can take. It's really easy to position trade. If you buy it here, I mean, there's no, if you're not using RSI extensions or ADR extensions like I do, if you're just buying off support resistance, if that doesn't work out, second entry and out, push up there. If you want to short it, that doesn't work out. You've got multiple levels coming up. They're all too close together for individual trades, but you would take one there, maybe one there, maybe one there, and then get out on the pullback off of that. So some of that is going to act as resistance. But there's no real reason for this to move independently this week. It will move off the US dollar because it's the CAD, but probably not sustained. So you probably get a good spiky movement, in which case then just buy it or sell it wherever it spikes to. So that's CAD Swiss. All the euros, So Lagarde came out last week and confirmed, well, actually not Lagarde specifically, but the ECB came out last week and confirmed that they are looking for a June rate change. There we go. ECB policymakers overwhelmingly favor June for the first interest rate cut. So, and then just down there, you can see Fed's swaps fully price in a 0.25 point rate cut in June. So it's all confirmed June. At the moment, if data doesn't change, nobody else invades anybody, nobody else decides that they want to change their gas prices, etc., etc. As long as everything carries on as it is, in June, we will see the US drop their rates by a quarter, the ECB drop theirs by a quarter, and potentially the UK as well drop by a quarter, assuming everything carries on as it is. So for now, we're in March, April, May, June. We've got another 3 months, basically, of this. Yeah. Absolutely no reason to be bullish. Absolutely no reason to be bearish. So we will wait until we change the rates. And the market will always go ahead of the rate announcement. So the market prices in movement. So when we know that we've got something specifically coming up, the market will make a move before that news event, which is why on news events, when you get an unexpected result, you get a massive move. If the market decides that the euro is going to drop in June, maybe around about May, early May, mid-May, it will start to put in a move and sell all of its euro off. If the ECB come out and go, actually, we're not going to change the interest rates down as we forecast, you get a massive news spike of 300 ADR because they got it wrong. So they get out. Yeah. So that's how the market works. They will always try and price in that move. You want to be ahead of the game, ahead of the profit curve. So when everybody sees the ECB drop their rates, they will obviously sell the euro. If you've already sold the euro, you're going to add more into your position. You're going to make more money. So you start selling before the market. You're trying to predict the movement, or the banks are trying to predict the movement. So at the minute, we've got nowhere to go on euro, but kind of sideways. There's no reason the Australians are going to change their interest rates either. They've actually said nothing about interest rate changes. They're currently sitting on 4.35. Their inflation is way too high. It's coming down very, very fast, but they're very comfortable with their interest rates compared to the rest of the world. So they would more likely wait for everybody to drop before they drop. So there's no reason to be bullish or bearish on the Aussie either. So sideways on everything. Any big moves you see are going to be based on the other currencies. So this is euro being a little bit weak. The Aussies had a bit of a rally last week as well. So this has obviously moved twice as big, twice as fast, but it's come straight down into support. And we bounced nicely off of support. So we are potentially coming back up into this propulsion gap, which is the start of that move. And then we'll see if that reversal there, we've got a reversal alert and a retest there. Yeah. So we'll see when we get there if that move is going to hold and they're going to add into it. If not, we're going to come up and we're going to retest that high. So at the moment, it's a long. As you can see, I'm long already because we've had the RSI extension to the downside. Big, strong drop straight into support. Double bottom bounce. I'm buying it and target up in propulsion. So we'll see if that works out. But if that doesn't work out and we don't get up to there and it drops, we've got a nice potential support area coming up there. Bit of a chop before it. And then we've got this 2 week of accumulation down here, that's December. So this is going into January. That's where we started the move from January. So if we are now heading back down to where we started from, we'll be scaling into that trade down to there and wait for a bounce on that move there. So at the moment, no news to move it this week, really. Euro CAD going to move off of the Canadian. Canadian's going to move off the US. So we're just flip-flopping around. You can see we got a nice bounce at the monthly high there. We pushed up, retested it, stuck, tried to break through, didn't get anywhere, came up, hit that level there, bounced, just flip-flopping. So no extensions, no trades. The last trade I had on this one was down here, which I had to hold for 2 weeks to get out of because the market didn't go anywhere. But yeah, no entries. as you can see, we've had movement up and down. This is one of the things I'm testing at the moment, actually. So I've done a lot of tests on RSI levels, and I'm testing a lot on 60-40, just to see how you need to scale into 60-40 RSI extension moves, because obviously we know that 80% of the time the market spends doing that and not really doing an awful lot. So 80% of the time you are sitting within that sort of 60-40 area. So I'm doing a lot of testing on potential strategies to trade that area. But obviously when it starts to take off and then we get these RSI extensions, you're in very early and obviously potentially into squeezes a lot sooner. So a bit dangerous, but with low risk and with higher spacing based on ADR, when you get into your positions, there are ways to trade that. So I'm building models on that at the moment with the new EA. But yeah, it's just going sideways. So looking for reactions at the highs and down at the lows. But this one is going to move off of the US news because the Canadian dollar will also move. But there's nothing to stop this pair until we get up to here, look. So from there, which is about 200 ADR out of this high, which we tested and bounced off of, if this breaks long and breaks the weekly high, you're not really going to stop until 200 ADR. So if we get to 200 ADR to the upside, if you see this break, yeah, you'll probably get an RSI extension somewhere around there. So that'd be a really good short if we can get there. But we'll see. Euro Swiss, fish on ice market tonight. Franco, are you taking the pills? No idea what that means. Fish on ice market. Don't know. Euro Swiss, Swiss franc powering up at the moment. We didn't go anywhere last week. As you can see, this thing is just a news event, not doing anything. Not sure what to do. Bit of weakness. Now we're not sure. Yeah, just the awful, awful pair. 43 ADR. It doesn't move much. Euro and the Swiss move together. So when the euro powers up, the Swiss powers up. When the euro drops, the Swiss drops. So if you've got something that is always moving with its partner, you don't tend to get a lot of happening, do you? So we'll see. Just flip-floppy. Fish on ice market. I get it. Flip-flopping fish. You had to explain that one. So watch for 150 ADR to the upside, ADR to the downside today. Potential nice bounce points, but not really going anywhere. Euro pound, same thing. ADR on this is 26. If you look at the ADR dashboard, Euro pound is the lowest ADR on the planet at the moment. 26 always is, always has been, but 26 is the average daily range on this pair. It's not only not moving, it's contracted and not moving. It's just shocking. So we have broken out on it of the how long was that? 1, 2, 3, 4, 5 month, pretty much, in it, of just doing that, out of the previous month of just doing that. So we're down here in the propulsion move that started to move up to the highs, and we've rebought it. So it's a long. But as I said, I'm in this, and I've been in this since January. Again, one of the first trades I got into. I've made money on it. So that, there, that, there, that, there, that, there. So I've banked a good % or two on this. But I've been in it since January. We had that month of movement down, and since then we have literally gone nowhere. So I'm looking to get out if we can get back up to there this week, but there's not really anything to do that. So I'm really hoping we get negative pound news this week. We've got GDP figures coming out and other bits and pieces, which will hopefully weaken it ever so slightly, weaken it enough to get up to here, and then I'll just jump ship. But short it from there. I love them to get up there, but if we get up to there, I can't hold it in hope. I've held it in hope 3 or 4 times, and we're just not getting up above that level. So yeah, buying it now because obviously it's down at the lows, and then get out up here somewhere. And then we'll see what happens. But we need some news catalyst. As I said, Euro have just said we're not doing anything to June. So for the next 3 months, don't bother trading us. The pound haven't really said anything, but they will go with the Euro and the US. So we can only assume that we're going to do this for 3 months. So look for range-bound trades. Euro New Zealand, got out of the shorts on this one last week and have flipped long on the RSI extension, which is in profit at the moment. I need to put a target on this as well. No other targets, so just going with the double top high, which is about 125 ADR. So this one has retested propulsion twice. They've bought it twice, so we have to assume that this is a new low, high, higher low, and we're going to come up and retest this area up here. So yeah, longs at the moment on it, but looking at basically coming back up 200 ADR from where we are. So 2 ADR of movement to the upside from where we are is basically all you're going to get to. So not, again, this is a great chart for telling the story of how the markets are trading at the moment. Yeah, it's just lots and lots of micro ranges within bigger ranges. There's nothing trending. There's no structure. It's just news event. News event, that's it. We're just reacting to news, and then we're undoing those reactions because those reactions mean nothing. This one here is a prime example. The New Zealand dollar forecasted a 5.5 interest rate. We got a 5.5 interest rate. The market sold the crap out of the New Zealand dollar. Why? They gave us what they said they were going to give us. You've priced in the movement for it. Why? There is no reason. So it just undoes itself because it's not a reason to sell the New Zealand dollar. So any of these big moves, we just have to wait for the market to unravel them over time because nothing has a reason to be long or short against anything at the moment. So Euro US dollar. So this is moving a little bit more, as you can see. So at the moment, got shorts on off of the RSI extension from last week from there. So second entry taken. We've got this nice area of balance here that we sat in for a good few weeks at the beginning of January. So this propulsion move, you can see that's grayed out there. We hit that last week and we sold out of it. And then we flew straight back up through it again on Friday. So at the moment, we're just sitting there waiting to see whether or not we are going to pull back down and retest this propulsion and come back down to these lows, or if we're going to rally off. So if we rally off to the upside, we're looking to come up to, not really, I mean, that is where they sold from initially, but more than likely would come up and test that high. So you can see there, we've got this high on that range of balance from January, which is about 125 ADR. Failing that, there's absolutely no reason really for it to stop until we're coming all the way up into this area here. So there's loads and loads and loads of upside room on this, but it's going to be based on that. So if we get positive US news, we're down here. If we get negative US news, we're going up there. But how long it's going to take to get there at the moment, I don't know, because we seem to just sit there and go sideways for weeks on end because the market's got no reason to do anything else. So it's the most painful time to trade at the moment because everything is just taking so long to play out. There's nothing you can do about that. The market is lackluster. It's just got no reason to move or do anything. So that's exactly what we're doing. We're sitting around for a long time, for weeks waiting, which means that our DD sits there for weeks doing the same thing, waiting. And then all of a sudden we get a payday and then we wait and then we get a payday. It's just the way it is at the minute. Nothing we can do about it. So Euro US dollar, there we go. So that's a nice push to the upside. So that's either going to come up, retest these areas here. I can't see that this is bearish market structure, but it might be. I can't see any reason why the US would power up enough to do that. And there's no reason why the euro would power down enough to allow that either. So we just need to wait and see if they decide to break out of that high. And even then, it may just peter out. It's all about the news at the minute. That's it. We're just going to wait for news events. We're going to drive a load of volume into the market, and then we're going to sit and wait for the next one. So, Aussie dollar yen, RSI. Looks like the Aussie's on the move. Sorry, the yen, rather. Mm, yeah, a little bit of weakness on the Aussie, and the yen's sort of in the middle at the moment. So those are your euro pairs. Pound, we're just coming out of this propulsion move. So this nice accumulation we had, we slammed out of that on the news. We're just coming up and retesting that area, and they're selling back into it again. I've got a long on this at the moment. Again, I've got no target on this. Might go for an ADR. I'm up at ADR. So we'll see if we get another push up into there. More weakness on the Aussie or strength on the pound. But this is an ADR extension from back on Thursday. Nice double bottom bounce. So textbook W pattern reversal. There's your reversal alert. There's your retest. So yeah, looking for it to push up and come up and retest these highs. There is this level here, which we obviously stalled at previously, which is what this propulsion move is coming back down through. So there is a chance that this might sell out of here. I think I've got a lot of profit on this. It's not really worth me taking off at the minute. Just leave it running, I think, for the moment. So yeah, pound odd, not really doing an awful lot. So again, same with everything, really. You want to be looking for high-low bounces. That's a lovely double bottom bounce off that previous month. So right now we're bang in the middle of the range. So we're either going to just flip-flop around in here for a bit, or we're going to push up, retest the highs, or come down and retest those lows. So we're bang in the middle of the range, high and low. So this could go either way. But at the moment, that double bottom sort of indicates that we're probably going to come and retest the highs, but we'll wait and see. Pound CAD rallying at the moment, short on from Friday's ADR and RSI extensions. This was an ADR hit on Friday and an RSI extension on the hourly. So 5-minute reverse alert went in on Friday, took that short. So again, need to put a target on this one. Down to propulsion. So just targeting the start of that move, which is a nice deep pullback. No profit. I'm thinking on this, on the H1M5 account, I'm struggling to bank on this at the moment. I mean, every single month so far, January is profitable, February is profitable, March is profitable at the moment. But I'm not managing to get enough money out. And it's because I'm using 0.1% risk. What I'm finding is when we get the nice big moves, the reward's just not there. Because I'm trading every pair with reduced risk, we're not getting any big enough movement at the moment to actually make a decent amount of money. The paydays, the big paydays are not coming because we haven't got the big moves. So I'm just struggling. I'm finding it very hard to bank at the moment. Like this one here, for example, move down to there, it's less than 0.25% profit. It's just not at the moment worth taking anything off at any point. You know, some of these trades that we've looked at, the pound odd, yeah. At the moment, we've pushed up into this propulsion and it looks like we're rejecting. I'm looking at this going, well, there's a good chance this might pull back, so I might take this off. But look at the profit on it. $66. It's 0.1%. It's just not worth my while to take the profit because the risk is so low because I'm trading all the pairs. So normally last year, not a problem using reduced risk, trading all pairs because we had a lot of movement. Right now, we are not getting any movement. This year, so far, everything is range bound. Nothing's moved, is it? Which is great for hedging ADR reversals, but for mean reversion plays, the mean reversions we're getting are so weak and prolonged, we're getting eaten away by swaps because it's taking so long to get out of stuff. So, and stuff's just not moving fast enough or hard enough to actually make a lot of money. So I'm toying with the idea of basically increasing my risk and reducing my exposure again. Going back to how I used to trade, just probably exposing myself 3 times on each currency. rather than going with higher exposure and lower risk. So upping my risk again to 0.25% per instrument, but exposure rules again, because there's a lot of green on the board here, but none of it's worth taking. This euro yen, from that sell, it's not worth taking off. It's only $100. It's less than 0.25%. It's not worth my while. So I don't know. I was thinking about it over the weekend because I was looking at January when I was doing my back testing, because it takes ages. I was just going through my P&Ls from January and February, just looking at the trades basically, and trying to figure out where things were going right and wrong, which is what you do all the time. You're constantly looking, oh, why did I get out there? That was a silly thing to do. Why did I get out there? That was a brilliant thing to do, that sort of stuff. Just analysing your performance, basically. And I was trying to figure out why I'd only made sort of 10% profit, because the trades all seem to work very, 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 very well. But because ADRs are all contracted, movement is contracted, and I'm taking lower risk, what's happening is we're getting big ADR numbers, which are gradually dropping and dropping and dropping and dropping and dropping and dropping. So as that ADR contracts down, you took a risk at one level of ADR. By the time you got out, the ADR was down there. So the rewards are smaller. So it's just becoming hard to extract cash, I think. So I'm toying with the idea of moving back over to a higher risk profile, because this is my main account as well. This is the largest amount of capital I've got on H1M5, but it's the one that isn't actually performing at the moment. It is performing. I mean, it's doing beautifully, but it's not doing as beautifully as I want it to. But anyway, that trade just kind of highlights it. There's a decent move there, but it's just not enough money to stick in the bank at the moment. It's just annoying. Anyway, so pound CAD, that's coming down nicely. Target is down there, but as I say, just about scrape 0.25% out of it because the movement is terrible. So we're going to get some movement on this week on the US dollar. So when the US dollar powers up, the Canadian will power up or drop. I'm looking for a push back into there. So just kind of, push, pull, push, pull, push, pull, get out. If in case it pushes again, if it pulls, whatever, I'm out. As you can see, awful lot of, bit of a grind and then sideways for absolutely ages. News event, pull back into the news event. So this is actually trending probably better than everything else at the moment. But right now, I've shorts on and looking for a drop. Pound Swiss, again, Swiss franc powering up very nicely at the moment. That's continuing to move down. So it's annoying I haven't got another position on that up there. No reversal alert. So this is coming down nicely at the moment. We've just had a reversal go in this morning on the hourly. The last reversal we had on the hourly was there. Yeah, where my average is basically. So again, you can see news event, no idea what to do. Yeah, we're getting so much, just an entire week of going absolutely nowhere. We get a little push and then just sit around for an entire week doing nothing. And it's the same thing, push around, push, sitting around. So I'm hoping we're just going to get the same price action. It's just going to come back the other way. At the moment, I've got targets all the way down here. I'm not going to get out down there, obviously. It's too far away. So I'm looking to get out in this propulsion move here. And then that position there will get out as well in a negative. So looking for a push down on the Swissy to unwind a lot of this weakness that we've had. But very hard to get in. So that was the extension that I got in on, which was over a week ago. We didn't go anywhere. Then we had one rally, and then we've sat sideways for 4 days. We had a little bit of a push on Friday, which is all being undone. We're back to where we were on Thursday last week, sideways. So in short, no bias again, pound against the Swissy. You can see how weak the Swiss franc's been. So the Swissy's had some negative moves. The Swiss, basically, I think what's happening with the Swiss franc is the market at the moment is anticipating the Swissy rate reduction to come faster than the US because their rates are so low, their interest rates are so low, their unemployment is so low, they are so good and holy. They're just the golden boy of Forex because they get everything right. They're absolutely loaded. They never have any problems with anything. And all the money goes through the Swiss banking system. So they just make loads of money. So their interest rates are the highest they've been for a long time. And their inflation is lower than target. So at any moment, the Swiss franc, and they do this, the Swiss National Bank, they turn around and go, we're changing interest rates. So they don't tell anybody. They don't warn anybody. They just go, we're changing. So I think the banks are worried that because everybody's now saying, yep, we're definitely doing it. Yep, we're definitely doing it. Yep, we'll probably do it when they do it. They're thinking the Swiss is probably going to go first. So they don't want to be in the Swiss when the rate comes down because obviously it's going to drop the value of the Swiss franc. So I think this is basically the market just being ultra cautious. We've also had no real problems in the last couple of months. So we've had obviously conflicts, Russia, conflicts, Middle East, conflicts everywhere, but that was months ago. So we buy the Swiss franc, we buy the yen in times of conflict. When there's anything going wrong in the world, we buy the Swiss franc and the yen. We haven't had anything go wrong. So we haven't needed to buy this. So I think we're due a nice unwind on this move. If you look at it on the 4-hour chart, you can see a lot clearer what we're due to get out of. And it's this leg here. Yeah. At least that, if not, that entire leg being unwound. Yeah. So I think this could be today the start of an unwinding on some of these Swiss franc moves, but we'll wait and see. We've had signals like this over and over again. So we're looking for a retest and drop. So looking good for shorts. Pound, obviously GDP this week. So negative claimant counts and negative GDP numbers for the pound will obviously help that along the way. If they will come out positive or that. So we'll have to wait and see. Pound New Zealand, again, New Zealand dollar, we know that was absolutely no reason for that move. They came and rebought it. They came and rebought it. I think there's a reason for coming back down and retesting this level. There's unfinished business with banks down here that they need to sort. So I think we'll undo that gap. So any negative news on the pound this week off of those two news events will give the opportunity for the New Zealand dollar to get that move undone. We've got no news on the New Zealand. We've got no news on the Aussie. We've got no news on the yen. So there's no reason for any of the Australasian pairs to power up or weaken. So we're waiting for that. Or the US dollar. Yeah, I mean, everything moves when the US dollar moves. So they could well use that. But push it up to there, more likely, I think, come and undo that move. But if you look at it on the grander scheme, this is the area we identified. I must move that off my chart because that's so old now. That's the area we identified for selling last time, which worked very nicely. That's where I would expect us to come and retest, which is last month's high. Sorry, 2 months ago's high. So you can see this area here, basically. So it's only 150 ADR away from where we are at the moment. So if we do get a push, you're going to find a lot of sellers up there. So I'd much rather be short than long. And potentially it's a nice little head and shoulders forming there to come and retest that level. But we'll see. But at the moment, it's just nothing. Pound US dollar, everything's moving against the US. Net US has been very weak. So got shorts on this at the moment. It's in profit. Again, not on profit enough. My TP's a propulsion here. 125 ADR to the downside. This one will move this week. Obviously, it's all news. So I've no idea where it's going to go this week. It's going to go where the news drives it. But they're going to want to take profit on this leg at some point, I should imagine. So I'd be much more interested in the shorts than longs. So those are your pound pairs. New Zealand is totally sideways at the minute. There's no trades on this. Last entry was a short from there, out, done. They have completed the propulsion gap move on the New Zealand dollar interest rates. Yeah, so there's a return to origin on that fake move. That's undone. So now we can do what the hell we like. Go anywhere we want to. But this will move on the US. So the Canadian dollar will move with the US dollar. You got lovely resistance up here. So we hit this level, sold it, we hit it, sold it, hit it, sold it, sold it, sold it, sold it. Then we started the move down, and we got the news to help us along the way. Obviously, because the news exhausted the market, it needed to come back and redo that. So I think this is probably bearish. But again, we'll have to wait and see what happens with the news. But there's no trades on it. There's no entries, no signals. New Zealand dollar Swiss is coming down nicely with the rest of the Swissies. They've also undone the New Zealand dollar move. You can see last trade short was there. Last trade long was there. So that RSI. Sitting in the middle of nowhere at the minute. Really could go either way. So never buy from the middle of a range, ideally. Yeah, wait until you get to the highs and the lows, because you've got much more chance of at least having the liquidity orders triggering to give you a bounce and give you an into that trade or an out of that trade. Right now, it's bang in the middle of nowhere. So reverse alert's just gone in short, so bears have taken control. So you'd be looking for a pullback on that leg at least, or we are pulling back on a bearish move. Yeah, one of those two things is going to happen. So either or. But at the moment, there's no news catalyst to drive it. So Swiss franc is rallying. So as long as that continues, if they do a 2 or 3 day Swiss franc rally, you can buy it when it gets back down to the last week's low. New Zealand, US, I've got shorts on at the moment, which are also in profit. Looking for a retest of this propulsion. I'm not getting greedy at the moment. I just want in and out as fast as I can because of the movement. But that's a nice retracement. We've had a reverse alert and a retest, and we came off of the previous highs. So the liquidity triggered up there, the limit orders triggered, drove the market back down from that level. So looking for a pullback on this leg. No idea if it's going to go long or short long term, because we are just stuck at the moment sideways in this range. So if it breaks out to the upside, we're coming up to retest this nice area of balance. So these highs, that propulsion gap is where I'd look for some sellers. Or we're just going to come down and retest this level, but I'll be out. If we get an ADR hit today, I'll be out. Anything that hits ADR, basically, get out. Because if you get an ADR, good job. US dollar CAD. Got longs on at the moment on this one. Got 2 longs on from the previous. We had an ADR hit on news, an RSI extension off the news. Second entry was taken on Thursday. So at the moment, I'm looking for a pushback up into that propulsion move. So that accumulation break, looking to come and retest that level. May get out here. I'll see what the profit's like when we get there. But yeah, I'm long at the moment. We'll find out what happens with the US dollar this week. So news, it's all about news tomorrow. Positive CPI figures, target hit. Negative CPI figures, scale in third position. Nothing I can do about it. Just waiting for the news. US dollar Swiss got shorts on. So I am hedged on the US dollar because I've got longs and shorts. So I don't care which way the US dollar goes tomorrow. I make money. So at the moment, I'm looking for a retest of this propulsion. So this low here held on Friday. We did push through it, got a nice big move off of the non-farm payroll, of the unemployment figures, but then the market just undid that move. So this little balance or accumulation here is holding at the moment. So we'll wait and see. But as you can see, we've been sideways on it for, since middle of February, so almost a month now. We're down at the lows. So if the Swissy continues to rally and the CPI numbers come out negative, we'll be down there within 48 hours. So we'll see what happens, but it's all going to be based around the CPI numbers tomorrow and whether that Swiss franc rally continues. But I've got shorts on at the moment, so I'm more than happy for them to drive down into propulsion, which would be nice. But if it does rally, obviously you can see the trade I've taken off twice there. Yeah. That I will just add back on and take off again. So I've already banked on it twice. If it continues to push up, I'll add that trade back on again, which is the next one in the cycle. But as long as we're going sideways like that, it's just, you just got to keep banking money, unfortunately. US dollar yen we've covered. So there we go. That's everything covered. You're trading ADR reversals on higher risk. Yeah. Any reason why you'd reduce the number of pairs? Because I've got more capital. I've got 50k in the H1M5, so I want less risk, basically. Less exposure, rather. If with any kind of this is why I always say you should always, every strategy you trade, you should always have a separate account for it, so that you can monitor and track what's happening with that strategy, because strategies will change all the time. When ADR changes, your strategy results will change. Yeah. When market regime changes, it goes range bound. Yeah. Your results with that strategy will change. You need to be able to identify what is working when, so that you can adapt. Because nothing is ever going to work the same. Look at these back test results, probably in this one. Is that test finished? If you look at the ADR numbers that I exported from, I haven't got it. Has this got ADR? No, hasn't got the ADR export. But if you look at ADR numbers and how they change, basically, ADRs expand and contract by anything up to 50% month on month. Yeah. So when you've got a market which is sideways bound, any strategies that rely on market structure movement aren't going to work as well. Yeah. Any strategies that you have that work well in range bound, ADR reversals, are going to work extremely well. If you have everything on one account, you're going to need to somehow unpick what's making profit, what's not making profit. Why is it working? Why isn't it working? So separating everything out is much easier to do that. At the moment, I've got the bulk of my capital tied up in a strategy that isn't as effective because the market isn't using market structure, because we're waiting for interest rates. The strategy that I've got the medium amount of money in, ADR reversals, is absolutely killing it, because we've got a range bound sort of market. So increasing risk on this account and reducing my exposure will mean that I will get into less positions, but I'll be able to get out of those positions faster, because at the end of the day, I'm about making money. Yeah. So if all of these trades here were sitting at 0.25% of profit, I'd bank the whole lot right now and stick it down there. But there's very little point in me banking all of this stuff to bank 0.5% on 5 or 6 trades. It's just not worth it. Because what's happening is we're getting all this movement like this. Yeah. So that amount of movement isn't enough to make money. Whereas if I had a 0.25% risk on that amount of movement, it's enough to get out. Yeah. So I'm just trying to get hard to get anything worth enough. I mean, I can bank that, I can bank that, I can bank that, I can bank that, and I can stick 1.5% into my account right now. But my drawdown goes up by 1.5%. And I'm just waiting for the trades to play out. But with position trading, for a trade to play out, you need the market to push against you and take a short. If it works, it needs to push down enough to make money. If it doesn't, we push up, we take a second entry, we have an average there. And it still needs to push down a fair amount to make it worth getting out. Because of my low risk at the moment, it's got to push down a little bit further than normal to get out. And the market is just not doing it. It's just like this, isn't it? Just sideways. So, you know, and it's nice having exposure in both directions. Like I said, I don't care if the US dollar rallies through the roof tomorrow or dumps through the floor. I make money either way because I'm hedged on it, but not with enough money to make a decent amount of money. So, is the ADR levels supposed to print on the screen if I only have the MRA trading on ADR reversals? Yeah. The EA isn't for analysis. The EA is to put on a VPS and trade for you. So the EA will only print what it needs to print. to keep it as optimized as possible. So yeah, if the market reversal alerts EA is running and you're not running an ADR based strategy, it won't print ADR because it doesn't need it, does it? It's not trading ADR. Which is the arrow indicator you're using? Don't know what you mean. Arrow indicator? Do you mean retests? That draws that. That's a market reverse alerts EA. That's a retest arrow. Market reverse alerts indicator, that one. That's what you mean. My sergeant passed by, said, "You should teach me how to trade." I told him I like you. I told him I like you. I wouldn't put that curse on you. Oh, you told him I like you? I wouldn't put that curse on you. Yeah. Yes. Painful at the moment, trading. I've been considering 0.2 risk as well. These days, 1 ADR in your favor is a godsend. Yeah, exactly. This is the problem. I mean, it's just getting an ADR of movement at the moment is hard. And it's not... I wish I really had an export I could do. I suppose I could run an export off of this terminal, couldn't I? Let's take it off of optimization. I don't even know what this is doing, so I've no idea what this is going to do. I've no idea how it's set up or what it's designed to do. But anyway, we'll get an export out of it, which is what I want. Oh, God. Turn it on, shall we? True. Okay. Take that off, and then that will do that faster. So just to demonstrate the point, what a ADR is doing and what it's capable of doing, basically, which is where we're stuck at the moment. Just how many days have we passed? February. Plenty. Done. So yeah, if you look at ADRs, so this column here is ADR. So starting January 2023, we were running at 1139 ADR. Yeah, look at how ADRs contract. So we've dropped down to 800. So we've dropped down sort of 20% on ADR. Now we dropped down to 750. So it's dropped down over a third, basically. And as you go on, you know, with that, we're sitting down at 765 ADR in January this year. Whereas we've had peaks, if I sort it by largest to smallest, peak ADR was running at 1400. Yeah, so 140 pips on the pound US dollar was the peak ADR. And we are currently sitting around about 750, 75. Yeah, so we're running roughly 50% of the ADR that we had last year. So the amount of movement, when we get an ADR hit, it's like, whoo, we got an ADR hit. And it's not happening very often because the market's contracted. But not only is it not happening very often, it's not moving very far, is it? It's moving half as far as it used to. So your risk, when you are using a small risk, you're making half as much money. Yeah, I'm used to banking 10 to 15% a month. At the moment, it's like pulling hen's teeth just to get to 10%. And the market is moving fairly nicely with fairly low drawdown on H1M5. Yeah, which is why I did the analysis over the weekend. I'm like, why am I struggling to bank so much money? It's because it's small risk. So I'd rather risk more money on less instruments because everything is moving So, you know, trying to get into a trade is quite hard. But what we're finding is we're getting to all of the trades at the same time because the Aussie will move and everything will trigger. But what I'd rather do is get into all of them, half as many of them, with twice as much risk so that I can take profit. What I'm doing is I find myself sitting here going, I can bank that, 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 but it's not worth any money. If I traded half as many pairs and that figure was twice as big, it would be down there. It's throwing me off mentally by running lower risk. I should be banking these moves, but I'm not because I'm waiting for the profit to come. So it's because it's low risk. So I don't know. I need to. I'm having a think about what to do. What I also don't want to do is up my risk dramatically just as those interest rate changes come, because the ADR is going to fly. ADR is going to suddenly expand exponentially and double. So it's going to be a tricky year this year. My wife thinks you're actually wearing shorts when you say I have shorts on. Yeah. So when I've got longs on, what does she think I've got? Long johns? Alternative is to run 0.1 on the new EA, then take extra manual entries on top of it. Yep, could do. There's many ways to trade. Market was just flat, didn't see the ADR line zoomed in. All right, okay, yeah. So yeah, if you can't see the ADR lines, obviously if you're zoomed in, you're not going to see ADR. It is there. It's just obviously where it should be. Look at this euro US dollar today. Prime example of we ain't moving anywhere until we get that CPI number. What's the Swissy doing now? Swissy's powering up a little bit more. Swiss pulling back a little bit. Yeah. Shorts, my missus reckons Speedos. Certainly not wearing Speedos. Budgie smugglers. I'm trading H1M5 with more risk, and swaps are eating all profits at the moment. Yeah. Yeah, I mean, this is the thing. Swaps are a massive problem. Yeah. Look at some of the swaps I've got in here. $177 on this euro pound trade. I've been holding this euro pound trade since the 17th of January. It's cost me $177 to hold it. Yeah. So I've got to make $177 more on that trade than normal just to get it to break even. This is the problem. So although the strategy is playing out exactly as normal, it's just trades are taking longer than normal to play out, which costs twice as much. This is where the problems are rising at the moment. So by increasing your risk, yeah, and using less positions, i.e. normal exposure rules, so trading 2 or 3 max on an instrument on a direction, what you're going to do is allow yourself to get out of those trades faster, because the monetary amount of profit will be hit quicker. So you'll hold for less time, which will cost you less. This is the problem. But this is all going to change when interest rates all drop. This is all going to change back to what it was before the interest rate rallies. But I'm only really noticing it this year. This year, I think, because we've become a lot more range bound in the last 6 months than we were the first, second, and third quarters of last year, I'm noticing it a lot more. It is becoming painfully hard to extract money. But it goes like this. You know, you have good years, bad years, easy years, hard years. There's a lot of traders struggling on a lot of strategies at the moment. But the beauty of our strategy is we don't get confused as to why we're not making money. We can identify it. The market still goes up and down. That's why we make money. Everybody else is looking for a strategy that gets them an entry and an exit based on a technical indicator. Technical indicators are bloody useless at the moment. None of them work. They're all terrible. Look at moving averages. If you're trading moving average crossovers at the moment, you're dead. You've been dead for months. If you're trading trends at the moment, you're dead. Nothing's trending. You're not making money as a trend trader. If you're a range-bound trader, you're absolutely killing it. But as soon as those interest rates drop, you're going to lose all that money and more, because everything's going to trend and your ranges aren't going to work. Yeah. There's only 2 types of strategy, isn't there? Trending, ranging. Mean reversion, breakout. That's it. So we don't care about any of that, because as long as the market goes up and down, we'll get in and out. But it's just taking ages to do it. You know, look at this chart here. I mean, it's a prime example. From there to there and there to there are our moves. And this started on the 16th of February. So this has taken nearly a month. And we've had 94 pips, which is 2 ADR. 130 pips, which is 3 ADR. So we've had a 5 ADR move in a month. But if you actually look at the moves, there's a move there, there's a move there, and there's kind of a move there, isn't there? Yeah. So in a month, yeah, this 5 ADR has been made up of 3 moves. That's it. So you've been sitting there for the rest of this month, undoing those moves, or sitting through nothing, waiting for the next move to kick in. So although it looks like, oh yeah, we've moved 5 ADR in 3 days, the rest of the time's been bugger all. You can't do it. You can't make money out of it the rest of the time. If you're on the wrong direction, i.e. you shorted here, you can't do anything. Whereas in a normal market conditions that we're used to having, it would do this all the time. Yeah, it's not. It's doing that. Doing a move and then nothing, and then a move and then nothing. Or it's doing a move and then it's unwinding it ever so slowly, but not enough to make money out of. Because it's not moving enough in the first place, is it? It's just, you know, it's just a painful market at the moment. Painful. It looks like it's moved an absolute mile, but the actual movement is there. Look, bang, nothing. Bang, completely undone, nothing. A move, nothing. A move, nothing. A move, nothing. 1, 2, 3, 4, 5 moves. 2 months, 5 moves. Just pitiful. It's just so hard at the moment. But there's nothing you can do. You just sort of sit through it. It'll all come back to, it'll kick in again. It's just, you've got to sit through this. We haven't had an interest rate rise like we've had ever. So we are going to get an interest rate drop like you've never seen either, I think, as well. But I'm not sure. Maybe, you know, there's a lot going on in the world at the moment. We might have another pandemic, and then Russia might invade Sweden or something ridiculous. And Iran might shoot a rocket at Russia. I don't know. Anything can happen at the minute, can't it? World's gone nuts. How to choose the pairs, though, if you're not using all. So basically, you choose the pairs that hit first. Same as I always used to trade. So basically, you can have the EA running on everything. Yeah. And then all of a sudden, you go, oh, look, it's taken 2 longs on the CAD. Go onto the VPS, turn all the other CADs off. Yeah. You can't, or do what I used to do, which is I have my VPS open and running, obviously, but I don't have the EA running on any pairs at all. What I do is I go, oh, look, we're extended on Aussie dollar yen. Yeah, so I wait for an alert, and then I open that chart on my VPS, I place the EA on it, and it will start to trade for me. So I use this, and then I add the EA manually onto the pairs that I want to trade. That way you limit exposure. So this is the way I always used to do it. This is the way I did it manually, and this is the way I started to do it with the EA when I first developed and built the EA and started using the EA. So I wouldn't have it running at all automatically on any pairs. Aussie dollar yen would hit, and I would go, excellent. So I'd be running it on Aussie dollar yen, and then all of a sudden the CAD yen would hit, and I'd go, brilliant. I'd put the EA on the CAD yen, and it would start to trade the CAD yen, and start to trade the Aussie yen. So I'm in those. So I am now exposed fully on the Aussie dollar, on the yen. Yeah. So then the euro yen hits, and I'd go, oh, there's an opportunity to short the euro yen. I can't. I've already got 2 yen exposures on. That's it. Simple as that. So if you want 2 exposures on each currency, use the dashboard. When you get an alert, place the EA on, get it starting in the move. when you get the next alert on the yen, you go, I can't, I'm already in it. That's how I always did it. And it was only in the last year that I started moving over to reducing risk and trading everything, which is absolutely fine. Again, so all I'm doing is I've reduced my risk from 0.25% down to 0.1%, but I trade everything. So instead of having exposure on 2 instruments, I can have exposure on 6 instruments with roughly a third of the risk. So the exposure is pretty much the same. The problem is, because there's no movement, I'm finding I'm just getting into everything. And getting out of stuff is just taking too long, which costs you more money, especially on the ends. So I might go back to that way of doing it, which is basically just, well, the other thing you can do is you can set the EA up on every instrument. Yeah. So on your VPS, if you just have the EA running on all instruments, so what counts this? No. So this is the H1 mean reversion. So you have it running on every pair, yeah. Except on every pair, you just basically untick allow live trading, yeah. So in the settings, have that unticked. So you place it on every chart, ready to go. Have that turned off, and then when you get a signal on the dashboard, you basically just come in and you go, right, Euro odd, ADR is extended, so I want to allow live trading. Click OK. Bang, that comes to life. So you have it set up ready with every pair, all set up ready to trade. And the set file that I used to use, I don't think I've got it on here. No. So the set file I used to use, basically, all it did was it had all filters turned off. So all the RSI filters were turned off. Everything was basically turned off filter-wise. And all I would do is place this on the chart with the distance spacing set, so half an ADR, 3/4 an ADR, whatever it was I wanted between my trades, the initial risk all set up, and I would basically say, just go short. So what it would do is the next reversal alert, it would just go short, and then it would position trade from there. So I manually wait for the RSI to get extended. Don't use the EA to monitor RSI. I just basically plonk the EA on there and say, take the next short for me. If that doesn't work out, scale in. So it's using that's how I used the EA initially to manage my exposure. And there's ways to build in exposure into things, but you don't really need to. You don't need to do that. You can do this all manually. And you should be doing this all manually, because if you're looking for something you can stick on a chart and automatically look after your entire life for you, it's never going to work. You've got to be able to know what's going on. You've got to be watching this. You've got to be involved in what's happening. You've got to be looking at these charts every day. If you don't look at the charts every day, you're never going to learn anything. But then again, I don't build products that make Lamborghinis. No, neither does anybody else. Although some of the set files I'm running on this, on my new EA, I have to say, the result, I need to verify all these results because they look too good to be true. And in my experience, when something looks too good to be true, it usually is. But I'm getting virtually 100% on most of these system parameter permutation tests that I'm doing. Producing some pretty big numbers as well, so which worries me because I think there's something wrong, but there's not. I have double checked some of these results already, and they are all working very, very well. What I'm testing at the moment is no lot multipliers. So all the tests I'm running at the minute is using a standard lot multiplier and no drawdown control. So there's no drawdown control being done at all automatically, no aggressive drawdown control trades being taken, and the lot multiplier is just 1. So we're not using any kind of scaling that is using higher risk as the market pushes further against. Obviously, there are times it gets into fairly big drawdown on all of these, but every single one of them works. So I'm looking. The reason I'm doing these tests is to try and produce a completely hands-off set of instruments that I can test over a decade. So pound US dollar and certain crosses where you're not going to ever get exposed enough that would hurt your account. You're not going to get into enough drawdown that would blow your account, but something you could just leave running and just return over a long period of time a pot of money. Because I want to put loads of different set files out there for different reasons. I've also got a really good set file that will treble your account literally in weeks, which would be fantastic for prop, but it blows accounts all the time. But when it works, my God, it will pay out. So I'm looking at using that maybe for some stealing money from prop firms type trading, but we'll see. But it will lose a lot as well, obviously, because it's gambling at the end of the day. But who doesn't like a gamble? We'll see. Harold, sorry if I missed this, but did you code the logic for the aggressive drawdown control into the new EA? Yeah. Although I'm not going to advise anybody uses it. Aggressive drawdown control, and I will cover this in the video, but aggressive drawdown control for me shouldn't be done because just because you are in a percentage drawdown or just because you are in a number of trades. It should be done because your portfolio and everything is at a level where you need to do it. So the EA can only work off of numbers. So with the EA at the moment, the aggressive drawdown control triggers when a trade is in a percentage or in a position, i.e. multiple trades are in a percentage in drawdown. It will then start to take aggressive drawdown control positions for you automatically. But you should be taking those at areas of logical that make sense, yeah? Or after you see something, right? So I took an aggressive drawdown control position on the pound Swiss on Friday. Yeah. Because of this. Yeah. The reason I took the aggressive drawdown control positions was because of this and that. Yeah. So the conditions for this particular aggressive drawdown control trade that I took were the market had moved up 61 pips, 110, 115% of ADR. So it's extended beyond its average daily range. And it was an exhaustion move. And there's a 3-bar reversal in there, but the 3-bar reversal happened after I took the aggressives. But anyway, but that was it. There's a billion reasons you would take an aggressive drawdown control position, but it shouldn't be just because this whole position that I've got on is in X% of drawdown. You should either have a confluence of support and resistance that is being rejected or some pattern on the chart that says this looks like it's the end. Yeah. The EA is dumb. So you set a percentage of your account in drawdown that a position is in and how much your aggressive drawdown control position size should be as a percentage of your entire risk on that instrument. It doesn't take into account anything else in your portfolio. It doesn't take into account market conditions. It doesn't know if there's news about to come up. It doesn't know if that spike was because of news. It can't because it's stupid. And I can't teach it to be any cleverer than that. Yeah, that's your job. So I'm not going to advocate using aggressive drawdown control in the EA. I won't be using it. But it's there as an opportunity. It's there so that people can run tests and go, oh, I see. Aggressive drawdown control gets you out of the position fast on one move. How it affects your trade. That's where I think the value is in it, but I won't be using it live. Yeah, I don't think it's something you should automate. Will the new EA be useful for those of us that have small accounts who just want to grow an account, i.e. not take a wage out of it? But yeah, I don't know. I will be releasing set files that will blow your account. And I will be very clear that these set files will blow your account. But they will blow your account when the market conditions are wrong. When the market conditions are right, they'll double it. Yeah. So it's this, you know, if you want to grow a small account, you can grow a small account very easily with normal settings. Yeah. If you look at some of these, I mean, look at this one that's running at the moment. This is running 1,000 tests. These are all different systems. So basically, this is testing ADR distancing between 0.5 and 1 ADR. It's testing risk, initial trade risk from 0.25 to 1% of your account. It's testing exits, so the target for a single position between 0.25% to 1.5%. And it's testing the target for a portfolio position, more than one trade, at the same values. So that is 1,024 permutations of the system, which is using RSI extension. No, ADR extension, this one. Out of the tests that are running here right now on the pound US dollar, 864 have run. 862 are profitable, which means that if any of these 1,000 settings you use with the EA, any of the 1,000, that one at random, will grow your account, because none of them have blown the account. None of them have not produced a profit. The amount it will grow your account by, I can't tell you what that will be, because I can't see what's going to happen next year on the pound US dollar using these 1,000 results. But these 1,000 results that are all profitable over the last 12 months on the pound US dollar, I will retest on a 4-year period. I will then retest on a pre-COVID 4-year period, and then I will reprocess over a 12-year period. If the results all come out around about 80%, 70 to 80% profitable, you can be pretty sure that you could basically set this on your account on January the 1st, come back on December the 31st, and you will have made an account growth on pound US dollar. This will all be replicated over 12 FX pairs. So the answer to the question is, will the EA be useful for those who want a small account and you want to grow it? Yeah. What it will grow it by, no one on the planet can tell you, because I don't know what's happening next year. Neither does this. But I can tell you in the past what would have happened. So all I'm doing with all back testing, which is what I always say I do, is robustness test. If I run 1,000 tests of different permutations of a strategy and 1,000 of them come out as profitable, that strategy is robust. It will likely produce the same results of one of those 1,000 in the future. I can't tell you which one though, because we don't know what's going to happen. So the profit goes from $744 was the very worst amount of money this made in a year. 744. The best it made was 20,600. So if you put this on your account, run it for 12 months on the pound US dollar, nothing else, right? It will make somewhere between $1,000 to 20 grand. That's about as accurate as I or anyone else on this planet will ever be able to give you with any strategy, because we don't know what's going to happen, do we? But we do know, it doesn't matter what you'd have done, whether you'd use 0.25% risk, 0.5% risk, 0.75% risk, whether you'd have scaled in over half an ADR, 3/4 an ADR, 1 ADR, whether you'd have taken a half ADR, 75% of ADR, 100% of ADR, 200% of ADR, yeah? If you'd have targeted 0.25%, 0.5%, 1%, 1.5%, all of them made money. Yeah. So like I keep saying, it's not about why you get in. Whether you get in because of a half ADR move, a 1 ADR move, or a 2 ADR move is irrelevant. Whether you use 0.25% risk, a 0.5% risk, or 1% risk is irrelevant. Whether you target 0.25%, 0.5%, or 1% is irrelevant. What is important is that you get in and the market moves up and down. If that happens, you'll make money. You can't not make money, because if the market goes up and you scale in as it goes up, when it comes down, you make money. Period. You cannot fail. This is what the banks and institutions do every single day of the week, right? What I can't tell you is how the market will move next time. So what this test tells me is, regardless of what we did last year, all of the settings made money. That's it. No one can tell you what it's going to produce, but it will grow a small account. Yeah. So if you run this test I'm running here, so my testing criteria is so basically this is the testing criteria that I'm running. So this is the full back test. So I'm testing H4 RSI extensions on M15 entries and M5 entries. I'm testing H1 RSI extensions on M15 and M5 entries. I'm testing RSI 14, 21, and 28, and I'm testing 70, 30, 80, 20, and 90, 10 extensions. So every possible RSI level on different RSIs using different time frame RSIs and different entries on lower time frames all being tested. Yeah. I'm testing ADR extensions of between 50 to 200% extensions on the 5-minute and the 15-minute time frame. I'm testing them over Aussie CAD, Aussie New Zealand, Euro Pound, Euro New Zealand, Euro Yen, Pound US, Pound Yen, New Zealand Swiss, US CAD, US Swiss, and Euro US Dollar. Yeah, because those pairs give you a complete overview of every market condition that we've ever had in the last 4 years since COVID. And prior to COVID, they also give you every market condition. Tight contracted markets for months, huge ranging markets for month, spikes, massive drops in the pound because Liz Truss cocked up and they crashed the pound. Everything's in there. We've got COVID in there as well, obviously, on all of these pairs. Yeah. So I test over 1 year with initial optimization to find out, is it robust over a year? I retest over 4 years to see if it's robust. That narrows down what is good and bad to use. Yeah. So if every single time we use 1% risk over a 4-year period, it blew the account, we don't use 1% risk. We need to use what? Lower than X. And it will tell me what is the maximum percent I should be using. Yeah. So it tells me all that in all that data. So then rerun with that optimized data over another period of time that the EA has never seen prior to COVID. And if the results of that come out similar, i.e. all system parameter permutation tests make money, we know the system is robust post-COVID. We know the system is robust pre-COVID, and it's robust across all instruments, i.e. it doesn't matter what that instrument did. If it was massively volatile because the yen was going nuts, it doesn't matter because the Aussie New Zealand also made a profit and that wasn't doing anything. Different market regimes, different market conditions, trending, ranging, everything. Yeah. So all of those tests will be run to tell me whether or not it's robust. Then the only thing you have to do, your job, is control risk. Yeah. So what we can do is all of these tests that I'm running tell me that if I use 0.25% risk, can I target 0.25%, 0.5%, 0.75%, or 1%? Yeah. So using tiny risk means I'm going to have what? Tiny drawdown. If I've got tiny drawdown, what am I not going to do? Blow my account. If I use tiny risk, how far can I push it when the market comes in my direction? That will give me an idea of how it will affect the drawdown on each instrument. Yeah. Once all those tests are run, that's it. You just know it's robust. I know it's robust. I know what the results are going to be before I run them because I've been trading it for 4 years and it's absolutely fine. I'm sitting here. I haven't blown any accounts. Happy. But what I want to do is put out a set of results and a set of set files that go, this is really ridiculously high risk. You're going to quadruple your account if you fancy it, but be prepared to blow it 4 times a year. You want to trade prop? There's your baby. If you've got a small $500 account, you want to turn it into $2,000 because you want to buy a £1,500 holiday or a mountain bike or whatever, stick it on just the pound US dollar, the US dollar yen, and the CAD Swiss. Just those 3 pairs and run it. You should return somewhere around about $1,500 for your 500 over a period of a year. Yeah, that's what I want to do. Put set files out like that. And you can see at the top, I've got a list. Highly aggressive, double an account fast, using small risk and tiny profits regularly. What I do every day. large risk, high probability setups, yeah? 90-10 RSI extensions on the hourly chart. Do you know how many times the pound US dollar hit that last year? None. Run it over a 10-year period. It hit it about 12 times. Do you know what the strike rate was? 100%. What was the maximum number of trades? 2. What could I have risked? 25% of my account on every single one of those and made a fortune and paid my mortgage off. But I get 12 trades in a decade. Yeah. These are those high probability risks. Stick the mortgage on. You'll pay it off. Yeah. I want a set file that does that. But I can back test, robustness test this now with this new EA over 10 years, literally in 3 minutes. All of this testing is just unbelievably quick. It's all what I know because I've been doing it for years, but it's nice to have the data to back it all up now. Long-term investment style, big drawdown, high returns. So I don't mind running an account with completely uncorrelated pairs. So I'll use Aussie, New Zealand, Euro, Pound, US dollar, Swiss, and CAD Yen. Yeah, those 4 pairs will give me complete diversity across every instrument out there. Yeah, but no correlation. So if you run that on an account and only that using a 60-40 RSI to just scale in all the time, when there's a squeeze, you won't blow the account because you're not overexposed, but you will survive the squeeze. You'll get very high drawdown on the account, 20, 30, 40%, which is big, but you will return a steady equity curve. So if you want to run a pension fund, that is the sort of set file that you will use. I'm going to do some low time frame testing and some high time frame testing, but I'm not sure I'm going to do much with that. Basically, that is testing daily charts and 1 minute charts. I'm not really sure. They're going to be at the end. And also, as I said about this morning, testing in line with swaps. So what would happen if I had all of the last 18 months only traded long on the yens? So traded XXX JPY long only, because I would have got positive swaps. What would the impact of that have been? So taking trades only in one direction based on swap, because every day we hold that currency, they pay us. So we're making profit just for trading. But the reason they give you those swaps is because the currency normally goes the other way, because the interest rate is the other way around. That's why they pay you, because it's less likely it's going to happen. So I'm going to do some testing on that. But again, these 3 will be at the end, kind of later testing. But all of this this testing basically is not to give anybody a set file that this is going to do this. This is what has happened with these sets, and these are the things that you should be using them for. How you want to use them and how you want to trade is entirely up to you, but they will do everything. Yeah. If you want to trade prop, go and trade prop. Yeah, it's gambling. Yeah. Flip a coin if you want to. You get the same results, but these set files, when they work, will absolutely smash it. When they don't work, which is going to be roughly 60 to 70% of the time, they're going to blow your account every week. But what you've got to do is run it every single week on a new account and pay $500 every week until the thing works. When it works, you're going to withdraw a ton of cash. When's that going to be? Don't know. Get your crystal ball out. But that is what it will do. I just want to explain that is what it will do. So this is what this set file did. Look at it. It blew the accounts. Well, that's crap. No, it's not crap. Think about it. It's not crap if it blows an account. What it means is it blew the account 4 times in a year. What's that mean? 8 times in the year, it milked it. That's good. We can use that information. We can 8 months of the year, we can make a load of money as long as you're happy to blow it. So if you make more than you blow, what you are, profitable. There's millions of ways to skin a cat, isn't there? This is the thing. And this is what these set files that and all this testing that I'm doing is just proving concept. Yeah, it's just proving what I already know, that when the market moves up, it comes back down again. I know that. So how is it best to extract that cash? Because we can't control when it happens, but we know it happens. So we just need to extract the money. So that's basically what the testing is doing. So to answer your question, Steve, in a massively long-winded way, yes, you can grow a small account, but you can do that with the market reverse alerts EA. That does the same thing. But all the settings, all the tests that I'm running at the moment are not using lot multiplication. When you add lot multiplication into this, it becomes infinitely more risky, but infinitely more profitable as well. So I'm going to release different set files. Super safe set files will not use lot multipliers, and they will not do drawdown control. Medium risk will use no lot multipliers, but they will use drawdown control. So you will take losses along the way, but you will get out faster. Yeah. So when the market's in the right condition, it will make a lot more money. When the market's in a wrong condition, it will hemorrhage cash. Higher risk is what I do, which is lot multiplication and drawdown control. So when things go wrong, I have to get out of trades and take losses. But when things go right, I'm in and out very, very quick, and I'm banking 15, 20, 25% months. 3 different risk portfolios, 3 different risk profiles. All will work, but where people go wrong is they don't understand why. So I need all this data so I can go, this is what happens when you do this. But you can run all these yourselves. I think this is what that person earlier was saying. Is there a demo of the EA out? No, what I was saying was you can download a demo version of any product on the marketplace and run it in the strategy tester and do all the testing, get all the data out. So you don't need to buy it to do the data research, do you? What, I can't spend $9.99, plug in a bot and make millions? You can if you go to eBay, yeah. There's lots of people on eBay selling those. I'm not sure their accounts last long with all the negative reviews, but how's the hedging working? Not well. Well, no, I don't know. It's made an absolute fortune, and it still is. It's done 23.5% this month, sitting in 46% drawdown at the moment. Pound Swiss and Euro Swiss and CAD Yen, because it's long in it. See, this is the trouble with the hedging. I've said it since I launched the thing. I'm not comfortable with the strategy at all, which is why it's got a very small money allocation to it. But these yen pairs that are long, I don't want to be in these at all. I'm not surprised that's in 6% of drawdown. But yeah, what I think I'm going to do with this hedging account is I'm going to take it off of auto, and I'm going to just manually get out of the rest of this and shut it down. It's banked 25 grand. No, yeah, so I know 20. We're at 25 grand, so it's banked 11 grand profit. So right now it's banked 11 grand. It's sitting in 12. So at the moment, over the first quarter, it's roughly break even because of drawdown. That drawdown of 46% can very quickly drop down to 20% in a day. Or in a couple of days, very easily. Did it last week. It was sitting up at this sort of level, and then we were sitting down at 18%. We only need one move to unravel, and everything becomes profit, doesn't it? We know that. So, but I'm just not comfortable trading it, and I'm also not able to manage it. So I might put it onto auto DD control, but I also don't want to run it against the yen. Yeah, there's something in the back of my head that's saying, yes, hedging is lovely as a strategy, but not against the yen. It's a stupid thing to do, buy yen at the moment, buy against the yen. So the EA is obviously, as I keep saying, EAs are stupid. And they do what they're told. It was told to go long because there was a reverse alert, so it did. We knew the reverse alert was going to be happening because the market needs to take profit on the move it's putting in, which is that way. So, yeah, I mean, at the moment it's in DD. But like I said, when I set it up, if it blew the account, it didn't blow the account all last year, but it was doing manual drawdown control last year, automatic drawdown control. I'm doing it manually. And to be honest, I'm not actually doing a lot of drawdown control on the account. So this is why it's a little bit more in trouble than it should be. I don't know. I've got lots of strategies which I would much rather run with the new EA. what I'd like to do, what I am going to do, is set up a high risk account, which is going to trade A+++ setups. So these RSIs. So like I said, with the pound US, yeah, I ran the back test on the pound US dollar and got no results. And I was like, shit, what's gone wrong there? I looked at it. I was like, why is that not giving me any optimization results? And then when you look at the pound US dollar, you can see it on this chart actually, because I put the RSI extensions on there because I was like, why is that not working? Because it's never got there. So I was testing 90-10 RSI extensions over a period of a year. And I was like, well, why did I not get the results? We never got an entry. Yeah. So what does that tell you? You're not going to get many entries if you trade 90-10, but do a 4-year test instead of a 1-year test, you do get entries. And it literally is 100% strike rate, maximum trades 2. So it tells me that I could, in fact, take a 25% risk per trade, and the drawdown was never more than 1.5 ADR. So the market after initial entry at 90-10 RSI extensions never moved more than 1.5 ADR. So if I risk 25% of my account over 1 ADR of movement and target anything over half an ADR, the worst case scenario on that 4-year period is every year I make 50% profit on my account. I will trade once or twice a year. I'm going to set an account up to do that. And it's going to replace my almost what I say, my pension fund account that I used to run on the S&P. So the market reversal alerts EA used to trade the S&P for me before COVID. Well, not actually before COVID, before the interest rates started to rise and we had the crash. So I'm going to replace that strategy with this. And it's just literally high, super high probability trading. Yeah. So there. That was an entry. You had one there. I think I might have run this cross test on a different account, a different. Oh no! I tell you what I did. I know what I did. I ran it on 85-25. Sorry. Yeah, because the 90-20 over what did I run it at? 10 years, I think it was. That was the one that gave me a handful of trades, but they were super high. You know, they just worked all the time. But you're not going to get many. So you know, it's like everything. If you go with the maximum extreme, you're very rarely ever going to get it happen. But when it does happen, it's going to work beautifully. So the 85-25 hourly, that was the one that got the super high accuracy. So you had 3 trades, and the 4th one is happening right now. Yeah. So you were in there, you were out there, you were in there, you were out there, you were in there, you were out there, and you are now in and in profit. 85-25 hourly. Phenomenal. So that will be an account I will set up, and it will just sit there, and it will do absolutely bugger all most months. We could look at it every month and go, how many trades have you taken? None. How many trades have you taken? 1. How much did you make? 15%. Because it's only going to take one every now and again. But the distance beyond in ADR is tiny compared to normal market movement. But also sometimes you won't get that half 50% retracement. You did on all of these occasions. I wouldn't, you know, I'm looking for something that's high risk, high reward, but also not taking any chances. Yeah. So if you look at all of these moves that you had from the entries, yeah, you had a 50% retracement. That one, 50% retracement. That one, 50% retracement was there actually, but that was a 38 plus. So what we're looking at here, 38 or 50. We'll have to wait and see, won't we? But stick a fib on it. So we should be looking to get into that propulsion gap or that propulsion gap. There's 2 propulsion gaps on the chart there and there. You probably can't see them. I'll take the fib off and zoom in and you'll be able to see. Yeah. So this propulsion gap is 38. This propulsion gap is 50. Yeah. every other time this has happened in the past X years, you've had either that or that. That every time, that 75% of the time, although it did hit that on the last one. It just took a couple of weeks longer than normal. But these setups, you just, you can't sell it as a strategy for regular use. It's something that you have to run as a strategy over a long period of time, because you're going to get so few entries. Where's my fib? You're going to get so few entries with the strategy, but they are going to make so much money long term. But it is long term. It's the sort of thing you want to put in, and at the end of the year, you'll have a wedge of cash you can draw out. I can't decide when to do aggressive drawdown based on total positions entered rather than drawdown. But total positions entered hasn't got anything to do with it either, Harold, has it? So sometimes you need to do aggressive drawdown control after 3 positions, sometimes after 6 positions, sometimes after 8 positions. If the market goes parabolic against you, you could be in 5% of drawdown after 3 positions. Sometimes it could go and you'll be in 5% of drawdown after 5 positions. So you've got to use a combination of everything. It's got to be your comfort level on what you see. Yeah. What if the market does this? Pushes against you by 1 ADR, does nothing. Pushes against you by 1 ADR, does nothing. Pushes against you by 1 ADR, does nothing. You've taken 3 entries and are sitting in 5% of drawdown. If you're saying that I'm not going to do drawdown control until I get to 7 entries, it could be pushing against you by 1 ADR for the next 2 months before it gets you anywhere near 7 entries, but you would be in something like 15% drawdown on the account. Can't go on numbers. You can't. This is why I was saying in the EA, all the back testing that I've done on aggressive drawdown control, I've decided I'm not going to use it. It's in my development list, remove aggressive drawdown control, ? Because I was going to get rid of it completely, because I don't think you should be using it, because it's dumb. It's too dumb. Aggressive drawdown control positions need to be done when you are uncomfortable, your portfolio is uncomfortable, an individual trade is uncomfortable, or something is happening that you can see that is like, this looks like where it's probably going to bounce because it hasn't for X number of days, weeks, or whatever. There's got to be a decision-making process that isn't mathematically based, because it's not based on maths. It's based on intuition, which you only get from trading for a while. But you can base it on maths. But my testing has shown that it isn't a good thing to do. Still running. So if I turn drawdown control, aggressive drawdown control up on this, and go for 3% in drawdown. No idea what this is going to do. I'll just run it as a test and see what happens. I think this is using 2. I don't think this is going to get many trades on, to be honest. Probably not going to get into. There you go. That's the danger with aggressive drawdown control. What it starts doing is just hemorrhaging money, because it's going, I've got 6 trades on. Let's go in with 3 times the risk, as we normally do. Why? Well, because I've got X number of trades on. But that's not a reason to get in with 3 times the risk, is it? There's a weekly and monthly confluence of resistance. A whacking great shooting star. We've hit 150% of ADR and RSI is extended. That is a reason to get in with an aggressive drawdown control position, not because you've got 5 trades on, not because your account is in 2.5% of drawdown, because the market looks like it's rejecting a level. It's rejected before, it's already extended beyond its normal range, and it's had a run for 3 days. That's why you're getting aggressive. That's why I'm short pound Swiss with aggressive drawdown control, because the thing's stretched to crap. Yeah, this is the danger of this trying to do this automatically, and this is why it's not in the original EA, because it's not something you can automate. It's something you need to do based on your portfolio. If I run that with a lower. This is testing ADR at 100. Let's test ADR at 75. And let's base our trades at 0.25% of ADR. That will get us in, a quarter of an ADR, that will get us into more trouble. Hopefully. It's probably just going to make us more money. There you go, look. That hurts. Yes, it does get you out of the trade. So we're out. Or actually there, we're out. But it gets you out unnecessarily losing. If I turn off aggressive, we made 10K using aggressive. If I turn off aggressive and run the same test, you'll probably find it will generate more profit. But it will take less trades over a longer period of time. This is spaced really close together, so it might actually take quite a bit of drawdown because it's getting in a quarter of an ADR apart. But we'll see. See, we're stuck in a trade at the moment, going sideways for quite a while. It's got out. So there you go. It made 13 grand. So it made more money because it didn't take unnecessary risk. It just waited for the market to do what the market does. So I just don't like it. But I'm going to leave it in there for anybody that wants to test with it. And you can use it if you want to. The beauty of the new EA is as well, you can turn it on and off whenever you fancy, and you haven't got to worry about it affecting anything. So you can go, you could say, right, I want to get in with an aggressive drawdown control position on this. I think it's the time that we should be doing aggressive drawdown control. So just turn it on, press the button. It will do it for you, but don't set it to do it automatically. Let it take aggressive drawdown control trades for you, but not automated. You can use it to take the trades when the conditions are right, by just basically saying, right, press the button, now do it for me. Yeah. So you don't have to do it yourself. Partial automation. That's what it's all about. Afternoon, Astro. Bill Gates, shouldn't you be rolling around in money? For the MRA EA, what setting if you want to take alert and then take next alert in the same direction, then close and reverse on opposite alert? So you would set the EA up to basically just trade reversal alerts. Yeah. So the getting out the opposite reversal alert is this one here. Close order on opposite alert. Yeah. So basically, if you market pushes up, you get a reversal alert short, you enter short, pushes against you, you get another alert, you enter short, average is there, market pushes down, pushes back up, gives you a reversal alert long. That would be the exit because you are closing the order on the opposite alert. So when you get a reversal alert in the opposite direction, we close all trades. I wouldn't recommend it. Test it, but I don't think you'll find it's profitable. That works well if you've got a single trade and you're looking to just ride. That's basically what the hedging account is doing. It's just getting in on all the reversal alerts, except it's not closing out on them. It's just getting in on them. And I'm closing them out when they get into profit. But that's basically what it does. don't forget, market reversal alerts are just that. They are a market reversal. It doesn't mean it's going to hold. It means that the market has just done something. Yeah. All indicators are telling you what's happened in the past. They're not telling you what's happening next. Yeah. There was a reversal alert there and it worked. There's a reversal alert coming up here. If it pushes up, it's not working. Yeah. There's a moving average. Price crossed below the moving average. Doesn't mean it won't cross back above the moving average. It's told you it has just crossed below it. This has told you that the market has been extended. What's it going to do now? No idea, but it's telling you it has been extended. There was a large order placed there and there. Everything on your chart is historical. Nothing helps you predict the future with any certainty other than 50-50, because you can't tell. The odds of something happening increase. So when you get a reverse alert, the odds of that moving down continue, but not because the reverse alert, because it's moving down. There's more chance. It's easier for the market to continue a move than it is to reverse it. When a bank or institution has started a move in one direction, it's much easier for that move to continue because momentum is there. You have banks and institutions seeing the same thing, adding to the positions, protecting their long positions. Other banks are jumping on board the rally. So it's much easier for that thing to continue going that way than it is to revert back to the mean of the move. Which is why everybody says trend is your friend. The problem with trend trading is by the time you've identified a trend, because you have to have a high, low, and a new higher low for a trend to be established, that trend is probably ready to reverse, which is why trend traders fail, because they jump in and go, oh, let's put a stop below that low and let's go for a 2R. You've already had probably 3/4 of the trend play out. Chances of you getting up there, not going to happen. Yeah, that's why trend trading doesn't work, because by the time you've identified there's a trend to jump in on, you've missed it. It started here. Your trend indicator is normally a moving average. Hey, we've crossed above the 50 MA. It's time to start going long. No. You missed it. It's time to start going short. This thing's stretched to crap. It's coming back down here. Anyway. New year almost ready? It is ready. Yeah, it's finished. I'm testing at the moment. I'm back testing. Creating set files. Parameter permutation testing, robustness testing. I've got a lot of testing to do. So the first round of testing is going to be finished today. I haven't quite decided what my next round is going to be. It's probably going to be longer term. So I'll be running 4-year tests after these robustness tests are run. Examine those results, and then I will take set files from those 4-year tests, run them across 12 pairs to make sure that there is confluence in those robustness tests there are working on other instruments, and that it's not just that instrument that's curve fitting those results. It won't be, because they're all 100%. All of them work, so it won't be that. But I need to test it to verify it. And then once I've got some set files, I'll push it out. But I've got 1 billion tests I want to run. Literally 1 billion. It's just like opening up a new can of worms for me, this, having rebuilt this thing. It's just like, oh my God, this thing is so fast. I can test what I really wanted to test. All my theories so much quicker. I've been doing it all weekend and running spreadsheets and getting very excited, which is unusual for me, because I usually run tests and go, that's a load of crap, and throw it in the bin, because 90% of stuff doesn't work. But this is what I've been doing for 4 years, and now I've got the data to back it up, which is fantastic. Thing is, if you're trading the trend and you get caught on the wrong side, it just becomes mean reversion play, except you're in earlier than you'd like. Yeah. The trend, this is what I keep saying, there's only two strategies in the world. There are only 2 strategies. Everybody that sells a course or sells anything or teaches anything or does anything in this industry is testing a variation of two strategies, because there are only two strategies. Yeah. The market is either range bound or breaking out of a range. Those are the only two things that happen. It's going sideways because there's no reason for it to do anything else, or it's breaking out and attempting to go long, creating a short-term trend. All it does. Yeah. So when it's going up and down, the range is either big or small based on the average daily range of the instrument, which will contract and expand as the range changes size. And in which case, then you will want to be a mean reversion trader. Or the market is breaking out of a range, trying to get into a trend, in which case you want to be a mean reversion trader. If you are any other type of trader, as far as I'm concerned, you're going to fail. Because if you're a breakout trader, 90% of the time it's going to break out and fail. You're going to lose. If you're a trend trader, by the time you've identified the breakout has happened and the trend has started, it's ready to start mean reversion. You're going to fail. If you're a mean reversion trader, it doesn't matter what the market does. As long as it goes up and down, you make money. I don't care how it goes up and down. As long as it goes up and down, you make money, because it will always revert to the mean. We just don't know whether it's going to be over that move or that move. But it will always revert to the mean of one of the moves it puts in over a period of time that it moves, which is how we extract money out of the market, isn't it? Which is why you don't need to be any type of trader, or any type of strategy is better than any other. As long as the market moves, we make money. That's it. That's all you need. You just need to find the most consistent way of making money for you, or the most comfortable way of making money for you. But you can't force the market to make you money. The market will give you what it gives you over a period of time. You need to extract it using position trading techniques. That's it. You can't force the market to come down from here. If it's not going to come down, it's not going to come down. So if you're a trend trader trading a moving average break of the 20 or the 50, why can I never select my moving averages? It's really annoying. So many indicators on my chart. I can never select a moving average. If you're trading those 50 moving averages, actually, it's not too bad, is it, this one? But very, very weak trend there, look. But you'd have got in on the trend on that, I don't know, when it broke and held the moving average, which possibly there, I guess, was the first time it broke and actually held it, which confirms, you know, it's the moving average bounce. This is what, you know, all the Steve Mauro traders with all their moving averages, your mustard, your ketchup, and your whatever, I can't remember what they were, but, you know, all those mayos and moving averages, yeah, when it bounces off of it, go long because we're in a trend, yeah, you've missed it. That's where you're taking your ketchup bounce. That's where the move started. That's where the reversal alert happened and where we got in. You got in up here. Look what happened after you got in. Nothing. Just came back down and stopped you out, because that's where your stop was, because that's where he told you to put it, and that's where you got lost. Took you 4 weeks to lose your money, but it don't work. Just like music, trading improvisation is a skill based on knowledge and experience. Yeah, it is. This is why you got to do charts, chart analysis. This, you know, this is what I keep saying to people. Chart time is absolutely critical to your development as a trader, because if you are not watching these things over and over again every day, and you are not looking at all the different time frames and analyzing and testing, and you're having all of this stuff burnt into your retinas over and over again, and you don't need to see it. You will know when things are going to happen, because you will have seen it over and over and over again. The market doesn't change. It hasn't changed for 100 years. It's done the same thing for 100 years. When there's more people buying it, it goes up. When there's more people selling it, it goes down. The decision as to go up or down changes like the wind, based on the banks and institutions that have the power to move it up and down. It just sometimes takes longer than other times to do the same thing. You need it burnt into your retina to know that, my God, this thing's been going up now for 6 ADR. It hasn't done that for a long time. I'm shorting it. You'll just know because you won't have seen it do this very often. And you'll be like, this is abnormal. That's when you want to get in. When things are normal, very hard to make money. When things are just doing, normal nothingness. Because that's what they do all the time, isn't it? That's why range traders get killed. Because by the time, again, it's the same as trend trading. By the time you've established a range, you've moved from A to B to C to D to E to, we've got a range, guys, to F. Oh, it didn't work. No, because you've missed the range. It's now ready to break out. Because it's all telling you what's happened in the past. Nothing to do with the future at all. I don't know which way it's going. This range could hold for 6 weeks, 6 months, 6 years, or 6 minutes. You don't know. So you can't plan it, can you? You can't plan the future you don't know. It's like trying to plan your funeral. Which is why everybody usually has one in trading. Can you use an RSI to trade the trend? Lower RSI MA filter. Yeah, you could use anything to trade anything. But yeah, so I mean, everything works. AZ, everything works and nothing works. Does it? Yeah, everything works when it works. When it doesn't work, it doesn't work. So you could use anything you like to trade anything. But the fact of the matter is, every time you press the button, the odds are 50-50. It's either going up or going down. So if you use what you do when everybody is looking at indicators, i.e. which indicator should I use? They're looking for something that happens over and over again. You're taught pattern recognition as a trader, technical analysis. You're trading based on what has happened in the past over and over again, which is fine, as long as you understand that it's happened over and over again during that period of time. And this period of time, it could do something completely different. Yeah. So you look at this, let's use a 50. Oh, this is a 50, isn't it? For God's sake. Click on it. Why is it not clicking on my MAs? There we go. So let's use the good old 200. You buy above the 200 and you sell below the 200. So you buy here. Yeah, and it moves up, and then you get out of your long there and you sell it. You buy it. So you make no money on that trade. You sell it. You buy it. So you bought it there and you got out there. So you made money there and you sold it. But what you don't see is all the little stop outs while it's just going sideways like this. But it's a great little tool when you look at a market like that. But when you look at a market like this that is crossing it constantly over and over again, yeah, it makes no money here. So then you go, oh, the 200 isn't the right one to use. And it's the same with the bounce plays. I can see the bounce plays here. Everyone's going to go, oh, how good is the 200 moving average? Look at it. It worked once. So you use the 200 MA for bounce plays. So this is your strategy testing period. Oh, what the hell? So you test your moving average. Why can't I scroll? I've gone too far. Where was that nice bit? Going on my chart. Chart's having a funny 5 minutes. Oh, I can't even find where it was now. But you know what I mean. You're testing a moving average. What is that bit I just found? Have I just changed pairs by accident or something stupid? Anyway, you test it and it works. Right? And you test it over a period of 6 months and it's fantastic. And then as soon as you employ it, it does this. And you're like, why are none of these bounce plays working? Well, because you're looking at what happened there. It's not doing that now. And then you go, oh, look, it's working again. Oh, no, it's not working again. Because it's history. It doesn't make any difference. Which is why the only indicator I ever use and why I say the RSI is king is because RSI is actually measuring something that is important, the relative strength difference between two things. Yeah, we're measuring strength of movement. not whether it's above or below a line, which is an average price over a period of time. It doesn't make any difference. Does it make any sense to use this as an indicator? There's only one indicator, as you know, that I use, which is the moving averages for the 2472, because they actually are based on time, monthly and quarterly periods. These are the reporting periods for institutions. So they tell me what the institutions are up to. But when the institutions don't know what they're up to, they're bloody useless as well. Sideways. Can't help you. Nothing in the past can help you apart from levels. We know that where the orders are sitting. That's all. Orders, what they've done in the past is the most important thing. Like that video Warren Buffett sent in the Discord. No one can tell where it's going. Yeah. Exactly right. That video is spot on. Warren Buffett knows what he's talking about. Obviously, we know that. He's the most successful investor of all time. Because he doesn't try to do anything clever. Yeah, he knows that the stock market goes up, so he buys the stock market. That's it. He doesn't time when to buy the stock market. He buys it, knowing that it will go up. And if for a year it goes down, it'll go up next year because it has to, because it's manufactured to do it. He's basically playing off of known facts and things that have to happen. The market has to go up and down. All FX pairs go up and down as the market pushes and pulls, makes money, takes the profit on it, makes money, takes the profit on it. The only reason I trade the way I do is because I know what the banks do. I don't know when they're going to do it. I don't know why they're necessarily doing any of the moves that they do, but I know what they do, and the reason they do it is financial. I know the stock indices that go up and are engineered to go up, and they will never do anything but go up over a long period of time because companies are manufactured to make money. So therefore, the stock market has to go up because it is a measurement of the success of the top 500 companies in the S&P's case, who are all going to make money. And if they don't make money, they drop out the index and replaced by one that does make money. Therefore, it has to go up. It's just knowing facts about what the market does. Your job is then to extract money from those facts. No indicator on the planet is going to tell you when these things will happen. If we had an indicator that could predict the future, I certainly wouldn't be selling it to you. I would be sitting making billions on a monthly basis without anybody knowing. But there isn't. It's called a time machine. We haven't got it. So all you've got to go on is past market history, but you've got to use only indicators that are based on price movements, strengths of movements, distances. We can measure distances and strength, but anything else that draws anything on your chart, like Agimat, that draws an arrow on the chart and says go long. Why? Because there's about 4 or 5 indicators under the hood going, in the past when this has happened, that's worked. Oh, it stopped working. Hey, here's a new set file. This one works. Why? Because it's based on that period of time where it failed. So we've made a new set file for a period now that would have worked if you'd have used these settings. What all indicators and strategies and everything out there is being sold on, isn't it? Bollocks, basically. This is why I run these tests. System parameter permutation testing tells me that if I was 1,000 different ways I could have got into the market, how many of them are profitable? All of them? Brilliant. That's all I need to know. I don't need to know which one to use. One of them. I don't know which one's going to work in the future. What I know is that they all worked in the past. Yeah. If you do 10 back tests, 7 of them fail, and you give the set files of the 3 that worked to people, you know for a fact that 70% of the time it didn't work. That's what you're being sold, most of this crap on the marketplace. All manufacturers do nothing but make the people selling the crap money, which is fine as a business model. But, you know, anyway, I've lost too much doing that. Experience, I've lost too much doing that. Yeah, well, this is the thing. Your experience is paid for by blown accounts. But this is why people give up, isn't it? People give up trading because they go, oh, I can't do it. No, what you've just done is you've invested a load of money in your education. Now you decided you got your education, you don't want to do it anymore. This is why everybody fails at trading, because it isn't something that you can do. You're just told you can do it in 3 months. You can't. You can't just start and in 3 months be profitable. You can't do it. No one can. No one's proven that they can do it to me. Just not possible. You've got to spend time learning it, and it costs money. bloody expensive, especially if you blow accounts every 3 weeks or so. You think the EA might be on the market next week? I don't know. Maybe. Yeah, I mean, this week I'm only doing one live room a day because I want to get this nailed out and done. So yeah, I would say so. I just want to get it done, basically. I mean, my back testing I can do forever. I could never. I mean, there's a billion system parameter permutations I can run. So there's I could never stop back testing this thing. I could test it until I'm dead, basically, and still not repeat the tests because there's so many combinations of things that you can test. But all the main robustness testing, I want to get 90% of that out of the way this week. And if I can, then it's then I push it out. But I just want to push it out with some settings. That's all. It's ready now. It's live. I mean, it's trading live on an account for me. But I need to push it out with some information. Got to do videos. Got to do all sorts of stuff. Can't just go, here you go. Because the first thing that's going to happen is I'm going to be bombarded with questions that I need to be able to send people to something and say the answers are there. Otherwise, I just won't get anything done. So I can't do that. But everything's done. Manual's written. Got to do the strategy explanations and the video. That's it. So yes, I will get on. What's the time? 10:45. Bloody hell. Been on for about 3 hours. So yeah, I will get on and do stuff. So back tomorrow at 12:15 for the US CPI. And we'll see how that pans out. So that's the big one this week you need to be aware of. This is where we're going to get the vast majority, hopefully, of the movement this week. And then that will run into PPIs, retail and unemployment on Thursday. So potential for a big move to start tomorrow and run into Wednesday. Thursday, that will either be a continuation or a reversal. So we'll see how we get on. But tomorrow's the biggie. The big one. So I'll be on live trading for that. All right, so have a good day. Anybody needs me, I'll be in Telegram and Discord. And I'll be working away today. And yeah, we'll see how we go. But I'm not expecting massive movements today because obviously we've got CPI tomorrow. So there's no ADRs yet. The Swiss franc move looks like it's unraveling a little bit. But I wouldn't expect anything to go nuts today because it's all about tomorrow. The big day. I've saved thousands getting free courses from people who quit. Yeah, you will have done. But those courses wouldn't help you because if they helped, the people that quit wouldn't have quit. Just saying. Right, I'll see you guys in the next one tomorrow. Have a good day. Anything you need, let me know.